Welcome to our 192nd weekly webcast. Now, what I'm going to do this week is I'm going to provide you with 25 amazing tips to help you become a better investor. And this stuff is all based on work experience I've had working at Goldman Sachs, as well as working in the hedge fund sector at a big hedge fund called Citadel and my own hedge fund, etc. And so what I want to do is I want to provide you with all the tips you need to outperform professional investment money managers. You can do it. I'm confident of it. And with these 25 tips, I'm going to set you up for good. And if you have questions, let me know. So let me head in here into my office. Keep it real. Woo. Hot day again. Globally, it's hot, man. All right, cool. So what I want to do is the big hedge funds and mutual funds, they can't outperform you or ETFs anymore. And the reason is because in 2002, the United States government decided, hey man, it's not fair. It's not fair that all these big mutual funds and hedge funds and rich people have access to information faster than we do, the retail investors. And so the government created something called Regulation F.V.T, or fair disclosure. And what that means is you and I can get access to financial information and news the exact same time all the professional money managers get access to it. And I'm going to show you exactly how today. Whew, done a lot of steps today already. All right, so here are 25 tips on how to pick stocks. And what I want to do is I want to provide you with, and I love using props when I teach, I want to provide you with just a ton of tips and tools or arrows in your quiver, so to speak, so that you can outperform the massive investors. And the tips and tools I'm going to be providing you with, I'm putting into three different buckets as follows. The first bucket is fundamental research analysis, then valuation, and then technical analysis in that order. Please don't ever start your stock investment research with looking at technical analysis. All right, let's get started. Let's kick it off with fundamental research. Okay, so, and please stick around on this call because what I'm going to do is I'm going to give you an incredible spreadsheet later on during this call that you can download to use as a template to help you pick stocks. I promise you it'll help. Okay, tip number one, only invest in what you understand and invest with a minimum of a 5 to 10 year time horizon. Okay, and Warren Buffett once said, only buy something that you'd be perfectly happy to hold if the market shut down for 10 years. And when I used to work in the hedge fund industry at Citadel, my boss, Carson Levitt, who's my mentor as well, my boss, Carson Levitt, told me about this brilliant man named Peter Lynch, who ran Fidelity's flagship mutual fund called the Magellan Fund in the 80s and 90s, okay, in the pre-regulation FD days when mutual funds had an edge over us retail investors. Now, Peter Lynch published a book, this book here, where he talks about how you must invest in companies where you've used the product. And the reason he said that is because if you understand this product well, you can understand if it might be more relevant or less relevant longer term. And so before investing in a stock, as part of your research, ask yourself this question, please. In 5 years, will this company that you're considering investing in and their products be more relevant or less relevant than they are today? And by asking yourself that question, it'll stop you from getting seduced into buying stocks only because the valuation is cheap. The valuation might be cheap for a reason, which could be because the company is becoming less relevant. For example, years ago, you might have wanted to buy Yahoo's stock because it was cheap versus Google. Well, if you asked yourself years ago, would you be using Google or Yahoo more often in search in 5 years? What would your answer have been? Of course, the answer would have been Google. And another example is my beloved Canadian company called Research in Motion that made the BlackBerry phone. And years ago, after you bought your first iPhone or Android handset, you could have asked yourself, would you be using a BlackBerry device or an iPhone in 5 years? And of course, the answer is you'd be using an iPhone or your Android handset. Now, what about companies where you don't use the products? Well, you can do your research and talk to people that use those products, otherwise don't invest in those stocks. And my boss at Citadel used to always say, Chris, if you can't explain it, you don't understand it. And if you don't understand it, you can't do well investing in that company. Tip number 2 of 25. The jockey is more important than the horse, meaning only invest in companies with great management teams, because ideas are commodities, but execution is not. Now, if the CEO does not make you excited when they talk about their products or services, then their customers won't be excited either. And great CEOs are great salespeople. That's how they became CEO. Also, never, ever, 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 ever invest in tech companies where all the founders have left, because founders are very long-term focused and the board loves them, and the board won't fire them if they had a bad quarter. And founders like Jeff Bezos don't give a damn about the short term, because as Warren Buffett said, the longer the view, the wiser the intention. And Jeff Bezos was so long-term focused that he hardly ever got on earnings calls. And I'll talk about earnings calls in a minute. He was so long-term focused as he believed that a company is only as good as its long-term customer service, and that great customer service and profitability are highly correlated in the long run. Very important. So what happens when founders leave a company? Well, the new CEO and all the senior executives are focused on the short-term success of the stock, and they know that if they take a risk and they try to think long-term with a new product launch, and if they fail, then their careers are over. For example, I had a friend who worked at Hewlett-Packard for years, and when the founders of Hewlett-Packard left, he didn't want to take risks with new product launches, because if he failed, he wouldn't be able to climb the corporate ladder. Now, turnarounds only work in the technology sector once or twice per decade, and Apple is a great example of this. However, in general, once a company starts becoming a little bit less relevant, especially in the tech sector, it's game over. Remember, turnarounds don't work that often. Tip number 3, understand if a stock is either a growth investment or a value investment. Okay, let me explain this and why this is crucial for investing. So let me kick it off with a value investment. So value investors, this will be value, this will be growth. Value investors like Warren Buffett, they like to buy stuff that's cheap, and it's not growing that fast, but it's cheap. And it's stuff that does well in a recession, like Campbell's soup, you got to eat even in a recession. Growth investors, on the other hand, they like to buy stuff that's expensive now, but growing really, really fast. And so you're either a growth investor or a value investor. Now, every growth stock eventually, because of the law of large numbers, becomes a value stock. It takes time though. Okay. And I mention this because if you invest in a company that's slowly transitioning from growth to value, it's in investment purgatory, as I call it. It's in no man's land. And growth investors don't want to buy it because it's not growing fast enough. And value investors don't want to buy it because, hey man, it's not cheap enough yet. And so what happens is a stock is stuck in the middle between growth and value. Okay. And you can underperform massively if you buy these stocks, because it usually takes 10 years for a company to transition from growth to value. Okay, it's a wasted asset investing in it. And I remember years ago I worked for Carson Levitt at Citadel, and then a big hedge fund called Pequot, and I wanted to buy General Electric, and he convinced me not to. He said, "No, Chris, GE, it's not a growth stock anymore, but it's not cheap enough yet either. It's stuck in the middle." And the only thing that can cause a growth stock to become value quickly is if you actually get activist investors involved. Okay, so let me give you an example. Actually, there's this guy named Carl Icahn. You might have heard him, and he's an activist investor. And basically, what he did was he realized that with eBay, nobody wanted to buy the stock because it wasn't really growing fast enough for growth investors, and it wasn't cheap enough for value investors. And to make matters worse, eBay had 2 different companies, the auction marketplace as well as PayPal. And the auction marketplace, the value investors love because, hey man, even in recessions, people buy cheap used stuff. And the growth investors love PayPal because it was growing fast. But nobody could decide if it was a growth stock or a value stock. It was stuck in the middle. And so Carl Icahn, the activist investor, he bought 30% of the company, muscled his way on the board. He forced out the CEO, a guy named John Donahoe, who I met, really nice guy. He's like 8 billion feet tall. And he made the company split up in two. Carl Icahn did. Okay, he split it up into a growth company called PayPal and a value company called eBay, meaning the eBay marketplace auction business. And those two stocks did tremendously well on their own. Okay, so understand if a stock is a growth or a value investment. All right, let's move on. Tip number 4 is analyze organic growth. What does that mean? Well, I want you to really scrutinize what a company's growth rate is internally, meaning products they create themselves, okay? And every sector has different organic growth rate metrics you can analyze. For example, in the restaurant and retail sector, it's something called same-store sales. And so investors love it when each Starbucks store, ticker SBUX, grows organically year over year. Investors love it when McDonald's, ticker MCD, each store grows organically year over year, meaning sales in each store. Investors hate it when McDonald's or Starbucks opens tons of stores, right? They over leverage themselves and take on too much debt. They don't give any credit for that. And so what McDonald's did years ago in order to grow organic growth and same-store sales was they started offering coffee. They started offering a 24-hour late night service for food in case people do too much to this. I don't do too much to that. I don't do any of that, by the way. That sort of thing. Okay. Another organic growth driver can be for the hotel sector, RevPAR, meaning revenue per available room. And what you want to watch out for is you want to watch out for companies where revenue growth occurs because they're buying other companies, meaning non-organic growth. You want to watch out for acquisitions because a lot of times companies will buy other companies to fool Wall Street and investors to thinking that they're growing when they're not. And every stock has a driver you have to look at. And I'll talk about this in more detail when we talk about valuation and how to do financial models coming up very, very soon today. All right, let's move on. Number 5, catalysts. When you invest in a stock, you have to buy it because you think people are going to like it in the future. Now, as a proud Canadian, Wayne Gretzky was my hero growing up. He used to say he wasn't successful because he skated to where the puck is. Rather, he skated to where the puck is going to be. And so we have to have the foresight as well as investors to invest in companies that people are going to like. If you buy a stock that everybody already loves, then there's not that many incremental investors to push it higher. So what's an example of a catalyst? So if you invest in Take-Two, ticker TTWO, which makes Grand Theft Auto, if Grand Theft Auto comes out 6 months from now, GTA 6, whatever it is, and you buy the stock now, well, investors are going to like that stock because you have a catalyst, a reason to be there. Always skate to where the puck is going to be. Tip number 6, buy broken stocks, but not broken companies. What does that mean? Well, when you see a stock falling and it feels like you're catching a falling knife, the stock's going down. If the fundamentals are still good, that's when you roll up your sleeves and start doing research. Let me give an example with Take-Two as well. So I remember I worked at Goldman Sachs at 9/11. It was awful. And I remember we came back to work in September when they opened up Wall Street again. And Take-Two, TTWO, the stock was getting crushed. It was like you're catching a falling knife. And the reason it was a broken stock but not a broken company is because at that time they had this game, Grand Theft Auto, which was supposed to be based in Liberty City or New York City. And in the background were the Twin Towers. And so investors were worried about that. And so Take-Two had to delay the game, recode it, get rid of the Twin Towers in the background and re-release it. And I remember I backed up the truck and bought a lot of that stock, and humbly it did well a lot longer term. So the bottom line there is buy broken stocks, but not broken companies. Tip number 7, never invest in a company in a tiny market, okay? And there's this concept of total addressable market. And a great venture capital firm that I've partnered with in the past called Kleiner Perkins, usually they don't invest in companies that don't have a total addressable market or TAM, of at least $20 billion. And the reason is, in the unlikely event that the company they invest in does well and gets 5% share of a $20 billion market, then that means that company has $1 billion in annual revenue. Okay, so remember that. Don't invest in companies that have tiny markets. Okay, let me give you an example. Okay, and let me give you a tough example because I know what you're thinking. You might be thinking, what about a company where the market doesn't exist yet? It does. You just have to think about it differently. For example, Uber. When Uber entered the taxi market, the online taxi market basically didn't exist. The total addressable market was zero. But the traditional offline taxi medallion market was massive. It was a massive total addressable market. So how do you find the TAM of a sector? Well, the way to find the total addressable market of a sector is you go to the top 5 or 6 companies in a sector and you add up the revenue for those top 5 or 6 companies, and that's a good enough proxy for the size of the total addressable market. Or you can do a search for consulting reports that talk about the total addressable market, like McKinsey and Accenture, where I used to work. All right, tip number 8, please be very, very unemotional about stocks. Okay, now Warren Buffett says you want to be greedy when others are fearful and fearful when others are greedy. And the best executives and entrepreneurs are unemotional, like Elon Musk. Okay, so Elon Musk backed up the truck, meaning he bought a lot of shares in Tesla in March of 2020 when everybody was selling because of COVID. He was unemotional. Then he sold a lot of shares in Tesla last fall. If you're watching the replay, last fall was 2021. And he almost top ticked the market. And the market peaks in early January 2022. So be careful. And be careful with chasing performance or FOMO, which is fear of missing out. Be a contrarian and watch your net worth take off. Moving on to tip number 9, which is research the risks, just like professional investors do. Now, professional investors and retail investors all have access to information at the same time, as I mentioned earlier. Now, there's 2 sources I want you to go to research the risks and learn more about companies. One is sec.gov, and I'll talk about international equivalents in a second. And the other one is investor relations for each company. So let me kick it off with sec.gov. So the way it works, and let's go there together, is if you're actually listed on a big market, you have to actually submit your quarterly report and your annual report and a bunch of other legal information and qualitative and quantitative information to the governing body's website of that market. In the US, it's the sec.gov, that's Securities and Exchange Commission.gov. In your country, if it's not America, please do a search on what is the SEC equivalent in your country's name. So in Canada, it's something called CEDAR. Okay, so now that we're at sec.gov, I'm going to click here on company filings. Okay, and then what I'll do is I'll enter in the ticker of a company that we want to do research on. And we're going to be researching the risks of a company. Okay, so let's enter in Meta, which is the ticker for Facebook. Okay, now before you invest in any IPO, okay, or any company, what I want you to do is I want you to read their financial documents. Now, in the United States, the quarterly report is called the 10Q, the annual report is called the 10K, and the IPO document before you invest in a company is called the S1. And so back in 2012, when I worked in the hedge fund industry years ago, I invested in Facebook's IPO, and I had this document in my hand to read. This is called the S1. I'll show you how to get it here. Okay, and we're going to search for the word risk. Okay, so right here, I go to view filings. I'm going to clear this, and I'm going to start a new search here, and I will search for the S1. Okay, that's the document for companies that go public. Okay, and you'll see a bunch of them. So they filed to go public. This is under my head here. In February of 2001 or 2012, and then they had an amended version of this S1 document up here. This is from May 16th, which is what you see on the cover here. If you zoom in, you probably can't see it. All right, so this document here that was in my hand is exactly what you see here. And so you can read through this if you want to. You can do a search on the word risks if you want. There's 29 matches. If I make it singular, there's 73 matches. You can click through and read all about the risks on this company, Facebook. Meta now, I guess, is the new ticker. And there's a lot of other financial stuff you can read through as well. I teach you about financial statement analysis and much more in my MBA degree program. Okay, so another place you can go to get information about publicly traded companies is each company has their own investor relations website. And if they're big companies, it's internal. Okay, if it's a tiny company, they outsource it to companies like the Blue Shirt Group here in Palo Alto, where I live. Okay. Let's do a search on investor relations, okay, and Facebook. Okay, so this here will take us to Facebook's investor relations website. And right here, what you can do is you can watch investor events if you want to. You can also watch a webcast of the annual shareholder meeting, all that stuff. Tons of other reports are here to help you understand how to invest in Facebook. And you can always call investor relations as well and get them on the phone to help you. They're there to serve you, the investor. And don't think just because you're a retail investor, you can't call them. I call them all the time, and so can you. Just don't leave voicemails, get them live. Okay, great. Remember, if you want anything in life, you got to ask. All right, let's move on to our number 10. Which is I want you to listen to all quarterly earnings calls. Okay, so basically what happens is this. Every publicly traded company, for the most part, they have to report earnings every 3 months. Okay, that's 4 times per year. And what happens is a week or two after a quarter closes, meaning after, say, the end of March for Q1, a week or two afterwards, the company will issue a press release. And in that press release will be the financial statements for that company and how they did in the quarter. And in that press release, they'll also talk about how the quarter went, and they might talk about what next quarter might look like, which is called guidance. Okay. And what they usually do is they issue, after the press release is issued, after the market closes, and sometimes they do it BMO before the market opens. But usually right after they issue the press release, they hold an earnings call. And I want you to listen to those earnings calls closely, please. Okay, and you can get the replays online. So let's see if we can find this for Facebook here. All right, let's go over here. Let's go here to, so this here is, all right, let me see here. All right, so let's go back in time here. All right, so this here is the first quarter results for Facebook, okay? And so here you can read through the press release and look at the financial statements here. And then what the company does, this is Outlook here, is they have an earnings call, okay? And they usually provide details about the earnings call, how you can access it online or by dialing in for free. What's a Toronto number for some reason? That's where I'm from, weird. And then the most important part though is I want you to listen to the entire call. Now, during the call, it's about 45 minutes long. Usually the management team gets up there and says, oh my God, we had another great quarter, even if it wasn't that great. That's right. Then what happens is they say, does anybody have any questions? And all the analysts that work at the big investment banks like Goldman Sachs, Morgan Stanley, UBS, etc., they get on the call and they ask questions. And I want you to listen to those questions closely, okay? Because the questions they ask are basically about the biggest problems with that quarter, okay, for the company. And they'll ask other questions like, did you have any large customers in the quarter? And you usually don't want to invest in a company if it's publicly traded and more than 10% of revenue comes from a certain customer. That's big customer concentration issues, risky. They also might ask questions like, what about geographic exposure? And they might ask, are you being adversely impacted by, say, oil prices, for example, given what's happening with the disgusting invasion by Mr. Putin. Other questions people might ask about are foreign exchange exposure, etc. Just listen closely to the quality of all the questions. And you'll learn also how to ask difficult questions. Like instead of a management team, instead of an analyst asking a question like, tell me about why your quarter was so awful, they might say something like, how should we think about the fact that your subscriber growth wasn't as great as it was last year with respect to Netflix, which just had 2 bad quarters in a row. Okay. Tip number 11 is I only want you to invest in liquid stocks. Okay, let me explain that. So liquidity means can you get in and out of something quickly if need be. Now, I want you to be a long-term investor, but I don't want you to invest in stocks that don't trade that much in case you need your money quickly. I'll show you what it means. Okay. So if we go to, let's go to Yahoo Finance, finance.yahoo.com, okay? And what we'll do is, come on, internet, hurry up. I'll enter in the ticker for a company we know that is liquid, Facebook in this case. Okay. So right here, Facebook, that's the share price there, okay? And the average volume is 32 million or 33 million shares per day. So you take 33 million shares per day times 176 or whatever the stock's at. And yes, you can get in and out fast within a nanosecond if you need to. And the reason I mentioned that liquidity is important is because during the fall of 2008, when we were within 24 hours of bank machines not working, a lot of hedge funds went bankrupt because they had bought illiquid stocks, meaning stocks that don't trade very much, and they couldn't get out. And as they were selling them quickly, they were forcing the share price to go down a lot. And so illiquid stocks own you in a down market rather than vice versa. Okay, let's move on to number 12, which is I want you to understand the barriers to entry for a stock, okay, before you invest in the company. You know, for example, if you wanted to compete with Amazon and sell your products online, well, a barrier to entry is that Amazon's been in the market for decades. They spent, you know, hundreds of billions of dollars, if not more, on their data centers, et cetera. They're the low-cost leaders. If you want to compete with Walmart, good luck, because, you know, Walmart, and I say it with love in my heart, don't start a retail company, because Walmart buys everything in bulk and they sell a lot of stuff at a loss in order to get you in the stores. Or if you want to compete with Starbucks, you know, they've got incredible brand name recognition with their company, et cetera, and consumer loyalty, that sort of thing. So the bottom line is understand barriers to entry for a stock, and understand the competitive environment too. And when you search through the financial statements for any company you're doing research on, or the 10K, 10Q, S1, whatever, you can search for the word competition as well. Okay, and they have to disclose all the risks. They have to, because lawyers help the investment bankers create these things. Okay. All right, tip number 13, I want you to invest in companies that never have inventory problems, okay? Don't ever start a company or invest in a company that makes a ton of products and then sells them. Well, I want you to start companies or invest in companies that sell the product first and then they make them, okay? And that's why, and I'll give you a really fun example here. It's a case study I did with my MBA students recently. So back in the early 1980s, there was a movie E.T., which I'm sure you've all seen. And what happened was the Atari Corporation, before it went bankrupt, because of what I'm about to tell you, they thought that, hey, if we make the E.T. video game, which was for the Atari 2600 when I was like 10 years old in 82, I am that old, they thought this thing would sell well. And so they made tons of these things. And I remember my dad bought me this for Christmas. I was so excited. And it was the worst video game I've ever played in my life. It was terrible. You had this guy chasing around these Reese's Pieces. It was awful. Anyway, so what happened was they had massive inventory issues with this cartridge, Atari. And they buried hundreds of thousands of these things in the desert, right? And you can Google it. It's a true story. It's fascinating. Okay. So if you're going to make a product that you're going to sell, or if you're going to invest in a company that makes a product they're going to sell, make sure that they sell it first and then collect the money, and then they make it. Okay, and that's what Michael Dell did with Dell Computer when he founded the company back in the 1980s in his dorm room. This was so problematic for the video game industry. What happened here was the whole video game industry went bankrupt in the early 1980s. And a couple of years later, Nintendo reinvented the entire industry. Be careful of inventory, okay? All right. Next up, oh, this is a good one. All right. So a bunch of props as always. Okay. Dangerous. Okay. So I always want you to do your own research on stocks and never let anybody, including me, tell you what to buy. And so I humbly want to teach you how to fish, but I don't want to give you a fish. And always do your own research. And there's something so cathartic, and I just love that sound. Yeah, really fun. Okay. The only fishing I've done recently is within the video game Red Dead Redemption Part 2, which I just finished, which was a blast, unlike this game here. All right, so always do your own research, and please don't listen to me in terms of what stocks to buy. I'll never tell you anyway, because I have too much love in my heart for all of you. I want you to always do your own research. Otherwise, what will happen is this. You'll sell stocks at the absolute worst time if you rely on somebody else to tell you what to buy. Okay. All right. Great. So we are now done with the fundamental stock research analysis part of this discussion. Remember, we got 25 things to talk about in terms of picking stocks. So what we're going to move on to now is the valuation-based analysis. And then we'll chat about technical analysis last. Remember, we're doing it in order of importance. Fundamentals, valuation, technicals. Okay, so the first valuation-based tip, which is tip number 15, is never value a company based on this year's price to earnings multiple. I'll explain what this means. So what I want you to do is I want you to value it based on your estimate in 5 years of your earnings estimates, okay? Based on your financial model estimates, okay, in year 5. And I teach this in my MBA degree program, which you can find out more details about at haroonmba.com. Shameless plug. Okay, but let's take a step back right now and really understand what price to earnings means. And I'm going to do something so ridiculous right now that you're never going to forget this when it comes to valuing companies. And I'm going to make math fun for everybody right now, okay? And what I'm going to teach you will make you dramatically think differently about math by using bananas. Okay, what movie is this from? I ain't falling for no banana in the tailpipe. All right, let me tee this up, and this will make a lot of sense. Please stick with me with this, because I think this is going to be a game changer for everybody. And I think what I might do is make this a little bit higher here. Okay, so here's what I'm going to do. Okay, I am going to shaken not stirred. Let me see if I get this in the frame. You know what I'll do? I think I'll use this angle over here. Okay, yeah. All right. So what I'm going to do is I'm going to teach you how to value companies using PE, and also how to think about the PE ratio using a banana. Okay? So what we're going to do is this first. I'm going to make a milkshake. Okay, and I'm going to use 1 banana to make this milkshake. And so what we need to figure out together, I'm going to do this live, this will be fun here. What we need to do together is we need to figure out how many milkshakes does 1 banana make? All right, let's do this. Okay, and this will all tie into price to earnings, which will make a lot more sense. Let me go a little bit higher here. Here we go. I feel taller too with my big hair here. All right, so what we're going to do is we are going to put in this 1 banana, okay? And again, we're trying to figure out how many milkshakes does 1 banana make so we can understand how to value companies. Stick with me on this. It's crazy, but crazy is good because you'll never forget. Okay. Remember people used to wipe out in cartoons when they used to step on those things. All right, so here's what we're going to do. We are going to create here. Oh my God, this is, oh dude, that's nasty. This is old milk I found in the fridge. My wife just got back from vacation. Oh, this is nasty. I'm not gonna be drinking this. Oh, dude. Okay. All right. Good thing it doesn't smell. All right. All right, I'm gonna freaking top on this thing just in case, because that was nasty. Oh, goodness. Okay, let's make this together. Dude, I'm gonna hurl. Okay. Make sure it's closed. Okay, great. So let's stir this up. Okay. Oh, I can just hear my son, if he saw it, he'd say, "Dad, brutal!" And let's see how many milkshakes this is going to make here, okay? Okay. All right. So I'm going to go here. 1, 2, 3. Let's just pretend that all we made was 3, okay? Pretend that that's all that was left in there because I can't take what else is in here, okay? So that 1 banana made 3 milkshakes, okay? Here we go. I'm not going to take a sip of this. All right. So 1 banana, okay, made 3 milkshakes. Okay. What the hell does this have to do with price to earnings, Haroon, you idiot. Okay, here's what it means. So price to earnings is a way to value stocks. And the way to think of it is this, okay? On the numerator, you got the price of stock. On the denominator, you've got earnings. Now, for the rest of your life, I want you to remember this. Whenever it comes to fractions, the denominator is always 1. It has to be 1. And here's why. For every $1 in earnings, remember price to earnings, price divided by earnings, denominator. For every $1 in earnings, how many times that $1 are investors willing to pay? Okay, so in this case, one banana, it's so ridiculous, one banana on the denominator made 3 milkshakes. One banana, remember the number 1 on the denominator, one banana made 3 milkshakes. So investors, when you see a company that's trading at a price to earnings ratio of 10, that means for every $1 in earnings a company has, investors are willing to pay $10 for that $1 in earnings. Capiche? Makes sense? Okay, good. All right. Now, usually if a company has a higher price to earnings multiple, like if a company trades at 20 times $1 in earnings, remember, a price divided by earnings, if a company trades at 20 times price to earnings, then that means it's usually growing faster. Okay. And a company that is not growing that much at all, it might trade at only 9 times earnings. For every $1 in earnings, investors are only paying 9 times that $1 because it's not growing very, very fast. So let me talk about price to earnings as I put this aside. Remember, one banana made us 3 very fresh things of milk, shake, stuff, nasty. Okay, doesn't smell at all, though. Thank God. All right, so let's talk about price to earnings in more detail. All right, so the average price to earnings ratio for stocks in the S&P 500, which is 500 stocks that make up the U.S. markets, the average price to earnings ratio is about 15 times historically. And that means this: for every $1 in earnings, okay, investors usually paid 15 times that $1 in earnings. Okay, that's a P of 15 times. Now, some companies in the S&P 500 trade at 25 times, and some trade at 10 times. The ones that trade at 25 times $1, obviously they're growing faster, usually, than the ones trading at 10 times $1. So how do you know what to value a company at then? Well, usually what you do is this. The average company in the S&P 500 historically trades at 15 times earnings. And the average company in the S&P 500 has earnings growing at 15% per year. So if we take a PE of 15 times and we divide that by 15%, that equals 1. Just stick with me on this, okay? 15 over 15 is 1. The price to earnings of 15 divided by the growth rate of 15% equals 1. Okay. So a company that has a price to earnings ratio above 15 times has earnings growing more than 15%. And so if a company has earnings growing at 25%, it usually trades at 25 times earnings. Okay, just stick with me here on this, okay? A company growing at only 10 times earnings will grow at less than, the average 15% for the S&P. Okay, so it'll probably grow at, say, 10%. So remember that ratio of 1. Okay, so usually a company, you can think about the PE as being in line with its growth rate longer term. Now, if a company is growing earnings at 10%, it should be trading at 10 times, right? But what if you see it trading at 20 times earnings and it's only growing 10% earnings? Something's wrong. It's overvalued. Okay. And vice versa. If a company is growing, let's say, at 10% earnings and it's trading at 5 times earnings, probably undervalued. Okay. Now, there's other things we have to look at as well. We can't just assume that's the gospel to buy and sell companies based on valuation, but it's a good proxy to go at, okay? All right, so how do you value companies? Like, how do you know what to invest in a company, what the target price should be? Well, I don't recommend, and this is a nice segue into tip number 16. I don't recommend valuing companies off of earnings this year or next year. I recommend valuing companies based off of your earnings estimates in 5 years or more. And so I remember many years ago, I owned Amazon and I owned LinkedIn, ticker LNKD, before Microsoft bought it, it sucked because I want to own that stock forever. And I remember when I owned LinkedIn and Amazon years ago, people would say to me, Haroon, you're crazy. You guys know I'm crazy already, right? They would say, you're crazy, Haroon. Why would you buy Amazon and LinkedIn at price earnings multiples of like 150 times? And I would say, no, you're wrong. Well, I wouldn't say that. I would say, no, it's not trading at 150 times earnings. These stocks are cheap because they're only trading at 3 or 4 times my earnings estimates in 5 years. And that's why I was able to stomach the volatility in those stocks and do well. So here's what you do. You create a financial model and you model what you think earnings are going to be in 4 or 5 years. And I teach you how to do all that in my MBA program. Okay. Then what you do is you look between years 4 and 5. And you look at the earnings growth between years 4 and 5. Okay. And let's just say that in year, year 4, you've got 80 cents per share in earnings. And in year 5, you got $1, okay, in earnings per share. Well, the growth between 80 cents in year 4 to $1 in year 5 is 25%. So I should probably value the company in 5 years at 25 times $1. That's what you do. You value companies many years in the future based on your earnings estimate. And yeah, we can get technical and discount the cost of capital if you want. We can go there. Okay, great. All right. So tip number 16 is use price to revenue to value a company if they have no earnings, okay, for the foreseeable future. All right. So remember, with price to earnings, for every $1 in earnings a company has, it's how many times that $1 you're paying. And remember what I said, for the rest of your life, I want you to remember that the denominator has to be the number 1, okay, in all formulas. So price to revenue means for every $1 in revenue a company has, how many times that $1 are you paying, okay, in terms of price to revenue. And it's another way to look at valuation if a company, again, is not going to be profitable for a long time. So what's the right number then? Well, it all depends on the growth in revenue. And more importantly, it depends on the sector. So for example, in the semiconductor sector, I'm going to make this up. You know, if semiconductor companies are trading at 4 times revenue, and let's say they're not all profitable, which a lot of them aren't during recessions anyway. Well, you might want to value or value Intel and these other companies at, I'm making this up, 4 times revenue. Okay, especially cyclical companies that don't have earnings when the economy sucks. Okay, so always look at the comps. All right, let's move on now. Or actually, one more thing. Stick around, again, because I'm going to give you an incredible template at the end of my How to Invest discussion that can help you outperform professional money managers if you do the work yourself. Okay, let's move on now to tip number 17. Tip number 17 is this. Build your financial model and then value companies based on at least 3 valuation methodologies. And I teach you how to build financial models in my MBA degree program. So what you want to do is you want to create your financial model and figure out what earnings, revenue, et cetera, cash flow are going to be years from now, many years from now. And you value companies based on 3 methodologies, at least, for your target price. Okay, for example, price to earnings, price to revenue, and discounted cash flow. And the reason why you want to use 3 different valuation methodologies, and investment bankers do this for IPOs as well. The reason we want to have 3 target prices based on 3 different valuation methodologies is to minimize the margin of error for whatever one of these is going to be way, way off. You never know which one it is, usually DCF, but you want to minimize the margin of error. Okay, so again, use 3 valuation methodologies usually. Okay, next up is tip number 18. We're almost done here. Is understand the one driver, okay, that makes revenue go up or go down. Okay, so financial modeling is a lot easier than you think. A lot of people think it's complicated, but it's not. Because once you figure out the one driver, the one thing that makes revenue go up or down, then most expenses are a percent of that revenue, okay? So the one driver, and sometimes there's two, but the one driver, for example, with Netflix is the number of subscribers, okay? And that will change what you think your financial model is going to be. You take the number of subscribers times the average selling price, the ASP. I mean, what do people pay per month for Netflix? Yeah. Other companies and sectors have different drivers. Okay, so for example, with Starbucks, it's same store sales. Okay, for hotel companies, it's RevPAR or revenue per available room. And so once you model revenue growth, it's so much easier to focus on what the percent of revenue is going to be for expenses for most line items to figure out earnings. So I'm going to do something really silly here. I'll probably use this camera here. Let me switch over here. Okay. So watch this. And if I throw this and it goes up here, what's the next data point? Probably there, right? And once it starts to decelerate, probably there. So watch this. An object in motion will stay in motion. Okay, and I know it sounds ridiculous, but that's how you think about revenue growth and modeling revenue growth as well. And obviously there's a hell of a lot more to it than just that. Okay, tip number 19, don't invest in companies where you only see 10 or 15% upside in, say, a year or two. Because it's impossible to call a stock within 10 or 15%. If you can do it, you're a billionaire. Nobody can do it. Okay, plus stocks go up and down that much in a month or two because of irrational exuberance or ridiculous volatility in the market. All right. I want you to invest in companies where you see hundreds of percent upside in the long run. Okay, so Mark Andreessen from Andreessen Horowitz, he talks about 5x5s, and he works in VC. It's different, but he'll say invest in companies where you see a 500% return upside in 5 years. I would say try to invest in companies where you see a couple 100% upside within 5 or 10 years. And if you're wrong, it's okay, because if you're wrong but not terribly wrong, you'll still make your 50, 100% in the long run. That sort of thing. Swing for the fences, go for home runs, meaning a lot of upside, instead of going for singles or doubles, so to speak. Okay. All right. Great. Number 20. We're almost done. We got 5 more after this. Okay. The easy way to download financial statements. So instead of going to sec.gov and downloading the financial statements by copying and pasting, there's another way you can do it. And this is what the professional investors use. They use something called BAMSEC, BAMSEC.com. Okay, so what you do is you enter in the ticker. It's like $30 a month or something. You get 1 month free trial. Don't use a different email address every month to get a free trial. Okay, and then what you can do is you can actually download the statements here. So I'll show you here. So you click on a statement, you go down to the financial statements within this 10Q, and then you click here to download Apple's. I actually don't have an account anymore, but you can download that directly into Excel hell. See right there? It's a lot easier. Yeah. And I would have loved to use that when I worked in the hedge fund industry years ago. Yeah. All right. But I'm an old man. Okay. All right. So we are done discussing fundamental and valuation-based stock research. And of course, I go into all of this in much, much more detail in my MBA degree program. But let's now discuss technical analysis, okay? And you only do technical analysis after you've done your thorough fundamental and valuation stock-based research, because stocks go up and down in the near term because of black swan or rare events, or because of geopolitical things that are completely outside of our control. And trying to buy and sell stocks only using technical analysis will bankrupt you. I have to say it again because I care a lot about my students, okay? only buying and selling stocks, or buying and selling stocks using only technical analysis will bankrupt you, because each month has 20 trading days and stocks go up and down, a lot in the near term because of stuff out of our control. And what happens is short-term traders get what is called fooled by randomness, which is the title of a great book. And there's a reason why we don't know the names of many successful traders. It's because they don't exist, or they make money on one or two times, but not in the long run. Okay, and calling somebody who trades actively in the market an investor is like calling someone who repeatedly engages in one-night stands a romantic, if that made sense. Okay, tip number 21. When it comes to technical analysis, the RSI is probably the best tool to use. And the RSI stands for the Relative Strength Index. And this stuff is self-fulfilling. Sometimes it works, sometimes it doesn't. But I do use the RSI to help me understand when to get into positions or to take a little bit of profit if there's things are oversold or overbought and there's mean reversion coming. Okay, so let's go to finance.yahoo.com and let's type in Tesla, I guess. Okay. And what you do is you go to the, let's see, all right, we go to the chart here, full screen. And then you go here on indicators, okay? And if you don't see RSI at the bottom, I already do. You click here on RSI, okay? Okay, great. And let me actually get my face off in the corner. That's like a Canadian hockey thing. There's a face off in the corner. Okay. And let's take a look here. So usually what happens, and again, it doesn't work perfectly all the time, is if the RSI, and this is tough to see, guys, but down here, there's a very thin, faint green line here, okay, at the bottom. Okay, and that means an RSI of 80. See on the right side there? 80, right there. So when the RSI is 80, the stock is overbought, meaning it can go down. And when the RSI is 20, that's that faint red line there, it's oversold and the stock could bounce back. Okay, so for example, here with Tesla, and I could pull up any stock really for this example, but right here, the RSI is about 80, and here it was 80 and it pulled back, right? There's mean reversion. Same thing here. It's tough to see. Let me pull this up here. Yeah, right here, it was also overbought around 80 RSI. And right here, the stock consolidated lower. In terms of it being oversold at a 20 reading, I don't really have it here because the market's been pretty good despite the fact we're in a bear market. You haven't seen too much volatility yet. Yeah. But if it reaches 20, it's a dead cat bounce, and that's usually an opportunity for you to buy if you've done, of course, the fundamental and valuation-based research first. So that's the RSI, stands for the Relative Strength Index. Basically what it means, it's math for mean reversion. If something goes down too much more than other stocks, it can bounce back and vice versa. Okay. Tip number 22 is moving averages. And let me show you this as well. Okay. So let's go over here to Tesla and let's go here to indicators and we'll add moving average here. And people like to look at what's called the 50-day moving average and the 200-day moving average. Let's just put the 50 here and we'll make it purple. Okay, great. So right here, this here is the average movement of the stock over the past 50 days. Okay, see this nice purple line here. And so if it doesn't go below the 50-day, people are like, okay, cool. From a technical perspective, it looks like it's holding that line. I'll keep buying. And then if it breaks more than a couple % down through, people freak out. They're like, oh my God, I have to sell, which is what happened here. And you can also look at another moving average, which is the 200-day, if you wanted to. Let me make this bad boy here dark blue or something. Yeah. Okay, so the 200-day is way down below here. And if the 50-day crosses down through the 200-day, a lot of technical traders say, oh my God, it's game over. Like in the movie Aliens. Remember that? It's game over, man. Yeah. Okay. Great. So those are our moving averages. Let me get back on track. See what we have next here. We're almost done. Okay, tip number 23 from a technical analysis perspective is support and resistance levels. Okay, and this one's a little bit tricky, but you just got to kind of ogle it and look for patterns. So let me actually go. Actually, screw that. Okay, So what I'm going to do is I'm going to pull up another stock to see if I can find a support and resistance level. So let me go. What came up there? Whoops. Okay. Genpact, whatever this company is. And now that we pull this up, let's see if it's liquid enough. It trades 1 million shares per day times 44 bucks. It is liquid enough. Okay. Let's go here to the chart. Okay, great. And let me get rid of these moving averages here. And let's take a look here. And whenever you see D, it means dividends. Okay. So what people do is this. So I'm going to take a screen print here. Okay, great. There we go. All right. So what people do is they try to see if a certain number is, or a certain point on the chart has not been violated. Okay, stick with me here. I want to show this to you. Okay, great. So they pick a point here. Hold on a second. Right here. And it's ridiculous, but it's self-fulfilling sometimes, okay? So right here, okay, actually this will work out well. All right, so right here you could see that over time the stock did not violate this low end of the channel. And then it did here, okay? And then technical traders freaked out on whatever company this is, and they sold it, okay? So it's got to be more than a couple percent below that line. I know it's silly, but it is what it is, okay? Do your fundamental work first and valuation second. All right, let's look actually at the high end of the channel now as well. Okay, so let me drop this guy over here. I'll just pick this random data point here. Okay, it goes both ways though, right? So, and it's not always a perfect science, I get it, right? But if it broke up way above the high end of the channel, people might say, oh my God, the stock is breaking out, that sort of thing. Okay, anyway. Yeah, it's a lot of it is like voodoo, meaning it's not really, I don't know. I would focus on fundamentals and valuation first, and then technicals a distant third. Okay, 2 more and we are done. And I'll give you the that template, which I humbly think is going to help you do incredibly well investing in the long run. Okay. All right. Tip number 24 is what's called the short interest ratio. Okay. And what this means is, so hedge funds, what they do is hedge funds, like when you buy a stock, it's like in American football, you go long, right? The opposite of going long is short. Okay. And so what hedge funds can do is they can make money if the stock goes down by shorting. However, if it becomes a crowded short, and I'll explain it in a second, what happens is hedge funds freak out if they realize too many people are getting involved in this short trade, like the hedge fund mafia is following each other, okay? The Walking Dead. So there's something called a short interest ratio. And a short interest ratio is basically you take the number of shares that are short on a certain stock, okay? That's the numerator. The denominator, okay, is the average daily volume, okay? So think of the short interest ratio as, remember the banana and the tailpipe thing on the bottom? So number 1 on the bottom, okay? So you got the short interest on the top, meaning how many shares are short. And on the bottom is the volume. So for every 1 share that trades per day in the stock, how many shares are shorted? Okay, so it can be deadly if it's above a number of 10. Okay, so let me show you an example and I'll explain some more detail. But the magic number is 10 usually. If it takes more than 10 days of short interest to cover a short, then people freak out, hedge funds, and they stop, they cover their positions. Let's go actually see if we can see the short interest for this guy here. Let me go to, maybe it's statistics. Let's see here. Short, here it is here. Okay, good. Here's a short interest ratio on this stock right here. Okay, so right here on whatever company this is, it's pretty low. It's 1.5. And what that means is this. It will take only 1.5 days for all the shorts out there on this stock to be covered. Now, as I mentioned, the magic number is 10. If it takes more than 10 days to cover the shorts on this stock, then people freak out, hedge funds, and they might think it's crowded. Okay, they might cover their short, which means the stock go up. So right here, let me show you here. Let's look at this in more detail. Okay, so if we go here to the summary for this stock, letter G, used to be prestigious, have a single letter a ticker too. I remember that. But right here, the average volume is, let's just call it 1 million shares. Okay, right, easy numbers. So basically 1.5 million shares are short. The short interest ratio is 1.5. So it would take 1.5 days roughly to cover all the shorts in this. That's not that bad. Now, if there were 10 days or 20 days worth of short interest in this, then hedge funds would freak out. And this data gets published every couple of months or whatever it is. They would freak out, man. They'd freak out because they'd think, oh my God, it's a crowded short. Too many hedge funds are short this stock. If anything goes right, hedge funds are going to freak out and cover their shorts, meaning close the positions by buying the stock. And I could talk about that in more detail if you have Q&A on that. And this is what happened with GameStop ticker GME, as well as AMCC during COVID, the worst part of COVID. We're not through it yet, though. So what happened was a lot of hedge funds were massively short GameStop, ticker GME, and AMCC, the theater company, because they thought it made sense. Hey, man, not many people are going to go out to the movies or to go to stores to buy video games, because of COVID. But what happened was it got really crowded. Too many hedge funds were short the same ideas. And so what happened was once hedge funds found out, oh my God, it's a crowded short, everybody freaked out. Okay. And the hedge funds all covered. And of course you had the Reddit crowd that were kind of working against hedge funds as well. Yeah. Don't do that, please. Manipulating stocks. The SEC doesn't like that. And I say it with love in my heart for all of you. Yeah. Okay. So now that's a good segue to talk about one more quick thing. Okay. Which is this. If a stock doesn't go down on bad news, then maybe all the bad news is priced into it. Conversely, if a stock doesn't go up on positive news, maybe all the good news is priced in as well. That's another thing to think about as well. But I want you to be long-term focused, but keep that in the back of, keep that in your toolbox, so to speak. And if you have questions about that, let me know. Okay, let's move on to the final tip, number 25. Okay, so we're now done with the technical analysis part of the financial of how to pick stocks. Now, in future webcasts, I'll talk about portfolio diversification and risk management as well, so you can understand how to create a collection of stocks in a portfolio to decrease your risk. Okay, so our final tip and the crescendo of everything that we've talked about so far is your investment write-up, which is tip number 25. You got to do this, okay? So let's go together to a great template that I humbly created for my MBA students that you can download today if you want to. And instead of being just 25 tips, it's over 100 tips with about 1,000 questions I ask you, which feeds into a one-page write-up and a massive 150-page investment write-up as well, which is the accumulation of all my experience having worked on Wall Street, at Goldman, hedge fund sector, venture capital as well. No tool exists like this, and I'm proud to share it with you because I love to teach. So come with me to this website, please. Let's go on a journey. Go to haroonmba.com/ all lowercase. Okay, watch this closely, all lowercase. EMS-4-2, which is for my MBA students, Economics Management and Strategy, Semester 4, Class 2. So again, this is all lowercase. Come with me there. haroonmba.com/ EMS-4-2. Okay. And once you're here, and it's usually not that fast, once you're here, click here to download a document that's going to help you to do your investment write-ups. Now, this only works in Microsoft Excel. Please don't ask about the Google Docs version. It's just Excel. Right. And when you download it, it's going to look like this. Okay. And this document here is, let me make myself a little bit smaller in the corner here. Look at me, I'm tiny. Okay. So this document here, it's basically 100 steps, okay, on how to invest in stocks. And I ask you a bunch of questions. You enter in all the details, and it gets, it comes out into a one-page investment research write-up. All these fields are tied here. Okay. And so when you print this one pager, it's got, when you print this one pager, it's got here and let me actually open it in PDF in preview here. Okay. And this is better for the environment if you, obviously you don't print it. But what happens is, just like I talked about today, and this is dummy data for Apple, okay? You got fundamentals, valuation, and technicals. A lot of the stuff we talked about today. And then down the bottom, if you want, you can include automatically. I've done it for you, your email address, your phone number, etc. If what you're doing is you're including this on the back of your resume when you're interviewing. And of course, I teach an interview as well, if you're interviewing at a finance company. Okay. So anyway, let me go back over here. Here we go. Good. All right. So what I do here is I ask you a ton of questions, okay, 100 steps, qualitative questions, quantitative questions, financial research stuff, and it all feeds into that executive summary I showed you here. And if you want, I even set it up so you can hide technical analysis if you don't want to use technicals, because some mutual funds hate that. And what also comes out of this is a 150-page detailed report. Okay, there's no product that exists like this in the market. It's not based on theoretical crap. It's based on my real work experience because I want to help. And what you also have here as you go through all these tabs here, okay, you can click here to go next on all of them. There's no macros here either. What you also have is this investment research dashboard that I created for you, which analyzes everything I could possibly think of when it comes to investing in stocks and so much more stuff I didn't talk about today. And here, on each tab here, I've got a video. If you click it, I tell you in a lot of detail, you know, how to use that tab, what all that stuff means. Yeah. So yeah, and let me turn the volume off here. But I basically run through it for you, explaining it to you in detail. Yeah. So anyway, this is a good template to use. It'll walk through also the income statement, balance sheet, and these are investment banking. Investment bankers like to enter stuff in blue that's hard coded, and everything else is a link somewhere else. Yeah. But check it out if you want. Again, you can download it from my website. Just go to haroonmba.com, all lowercase here, EMS-4-2. And if you have any questions at all about this or my MBA program, let me know. To learn more about my MBA program, just go to haroonmba.com, you know, the website. Yeah. Okay, great. This was fun. Now, give me 1 second here before I take your questions. Thank you. Okay. Okay. And what I'm going to do is I'm going to take a short break, really quick break, and I clean this stuff up and get this out of my office and give this to my three boys, Andrew, Matthew, and Dylan. I'll tell them this is the best milkshake they've ever had. Yeah. I won't do that. Maybe I will. Okay. No, I won't. All right. So I'm going to take a very short break, and then I will answer your questions. Now, here's a very short vlog that I'm humbly proud of that explains a lot about why you cannot ever rely on anybody to tell you what to buy. Now, in this vlog, you know, I come after this firm called Motley Fool, okay? And while you watch this short vlog, please, I beg you, please, like and subscribe, as when you like and subscribe, it really, really helps my business a lot. Okay, great. So I will be right back. I'll clean this stuff up here. Thanks. What are your thoughts on investment services like the Motley Fool? They're heavily advertising and seem to have long-term investment advice similar to Buffett. Are these services worth it? I don't think so. And do your own research. Don't just rely on me, please. Do your own research. But Motley Fool kind of got started back in the 90s. They were the first kind of notable online repository for investment advice. And I remember the first notable stock they pitched was called iOmega. And I'm dating myself. Any storage people out there, you'll understand what that is. It was just an old cartridge that you could hook up that had a lot of memory on it, which means a couple kilobytes. And they actually made a good call on that. And so they started to sell their services and whatnot. And I don't think you should ever take anybody's advice when it comes to buying stocks. Always do your own research. Always, 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 please. And if you don't, then what will happen is you'll sell that stock at the worst time. You'll panic and you'll be a tourist in the stock. You'll only be renting it. You got to be very, very long-term focused. And as Warren Buffett said, the longer the view, the wiser the intention. Always do your own research. And I got to quote Buffett again. I got a great one here. So Warren Buffett said the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Think about that. It's amazing, eh? It's amazing. So do your own research first. And just be careful when you go to certain websites and you see what are called sponsored stories. those will bias you. And I don't want you to take advice from any CEO that goes on a financial news program or has a guest column online, because CEOs are the best salespeople in the world. They're not unethical, but they're going to be positive about their company, obviously. That's how they got to the top. They're great salespeople. And anybody who's interviewed on television that talks about stocks, a lot of times their clients could be paying the bills for them, even if there's a Chinese wall separating investment banking and trading in that company. Just be careful of that. Just be careful, please. Or it might be a portfolio manager that's being interviewed that owns that stock, for example. So just be careful. And I think it's a good exercise for me to take you over to teach you what a sponsored story is. When I ran my hedge fund, I used to pay thousands to Bloomberg, and then I said, no more, dude. We're gonna get everything here from Yahoo Finance because it's free and get all the same stuff. However, when you go onto this website, you got to be careful. I'm gonna look really closely here, okay? So right here, this is an ad. Okay, oh, Raging Bull's still around. Interesting. Yeah. You've got sponsored stories everywhere. Just be careful of that. And by the way, a newspaper I recommend reading for just high level how the world works is the F.V.T. But when you look at this newspaper, I don't want you to read anything that tells you what to buy or sell. Like, don't read interviews with money managers. What I want you to do is only read articles that tell you how the world works and nothing more. And always, always, always do your own research, please, please, and be a long-term investor. Trading doesn't work. Please don't trade stocks. All right. Well, our first question here is from Solomon. How are you? Thank you for subscribing to my channel and joining, clicking the join button to join and get 5 courses for 99 cents. Appreciate it. Okay, so Solomon wrote, hello, Chris. Nice to see you again this week. I have a question about stocks. Is there a way I can predict a stock that might explode by more than 5 or 10 times its value? Yeah. So what I love doing is I love doing long-term research on stocks so that I can stomach the volatility. And if you apply the concepts I talked about, meaning those 25 tips, or the 100 tips in my MBA degree program, then the probability of you making a lot in the long run goes up materially. I can never guarantee anything. As I mentioned with the fishing rod, I can teach you how to fish without providing you with a fish, and I say it with love in my heart. But what you want to do is, if you want to invest in a stock you see as a 5 or 10 bagger, you have to build out your financial model. Okay, and as I explained with the banana and all those crazy ratios and stuff, you got to think long term. And you have to value companies based on your long-term target price. And so many years ago, I invested in a company called NetSuite. The ticker was letter N before Oracle bought them for about $8 billion a couple of years ago. And when I bought the stock, I remember thinking it was a 10 bagger. And I did really, really well on it. And here's why. The market cap of NetSuite, ticker N, was $2 billion when I invested. And I did a long-term model. And the company was trading at like 300 times earnings in year 1. And remember, you never look at a company's valuation this year, okay? You look longer term. That's how hedge funds make money. And so what I did was I analyzed the company, and I thought to myself, hey man, NetSuite, what they do is they do what SAP does in the cloud. And SAP at that point in time had a market cap of 70 billion, way back then, years ago. And Salesforce at that point in time also did what NetSuite did, but in the cloud. And Salesforce had a market cap of $20 billion at that time. And Salesforce only did one thing that NetSuite did, which was sales-based software automation online, cloud software. And so I modeled out NetSuite longer term. And I saw it as a 10 bagger, which it was. But you have to do long-term financial modeling, which I teach in a lot of detail in my MBA program, in order to thoroughly understand what the upside can be in a stock. And it's not as hard as you think. All you do is you model revenue growth longer term, and then you model a bunch of expense items as a percent of revenue. And it's a little bit more complicated than that, but I keep it pretty simple. And again, I teach about that in my MBA program. But you got to think very, very long term for that to work for you. And what you also have to do, as I explained with that template I showed you, you have to write a research report, even if it's just one page that has fundamentals, valuation, and technicals on it. And the reason you have to write that research report before you invest if you think a stock is a 5 or 10 bagger, is because once you buy the stock, I promise you, a year or two later, the stock might be very volatile. And you'll be like, oh my God, am I crazy to have bought the stock? Let me go back and read that one pager. Okay, I'm reading the one pager I created 2 years ago, which has fundamental valuation and technicals on. And I'm thinking to myself, okay, the stock is really volatile today because of news X. Had I known about news X when I made this one-page write-up, would I have still bought the stock? And if the answer is yes, then buy more. If the answer is no, sell it. Don't be emotional about stocks ever. You got to be like Elon Musk, who's very unemotional about business. He backed up the truck and bought a lot of shares in Tesla in March of 2020 when the market bottomed. And he sold tons of shares in Tesla late last year before the market peaked in January of this year. And he's very unemotional also because he announced he wanted to buy Twitter. And, he looked at the deal and he's unemotional about it. He walked away. And there's other reasons to it. I can go into more detail. The bottom line there is, though, you have to think long-term, you have to be unemotional, and you have to do the work. Never rely on anybody, including me or anybody that speaks gooder than me, which is everybody online or financial news journalists. Do the work yourself because nobody is smarter than you. Okay. All right, next up, Kumar wrote, it would be great if you guys could collaborate on a webcast. Would love to see a venture capitalist and super talented hacker together. Yeah, we're going to be doing a lot more videos when it comes to interviewing people. Right, I'm in Silicon Valley, so I'm going to pick up and go and interview the who's who of CEOs. And for my YouTube channel, I'm kind of changing things right now. I've got my son Dylan involved. It's tough for you guys to see, but I have a desk set up for him here as well. He's 12. He's helped me out a lot. He's amazing. Yeah, he's great. It's this guy here in the middle, but he's a lot older now. Yeah. And so what we're doing is he's actually putting this together to monitor our goals. And here we go. I gotta say it publicly now. And if I was a quota-carrying sales rep, I'd be fired. Okay, I gotta let you know that. I'm always too optimistic. So his goal, our goal, is 100,000 subscribers by year end, without the comma now. And then our goal is 1 million next year, and then 10 million the year after, and we're gonna do it. And as James Cameron said, great Canadian, I'm Canadian as well, and James Cameron is the director of Avatar, and Avatar 2 is coming out later this year, I can't wait. He said if you set your goals really high and you fail, you still fail above everyone else's expectations. So thank you for the feedback. And if anybody else has feedback on my YouTube channel, just go to my YouTube page and you'll see 2 days ago I published a vlog asking you all for feedback. Please type your comments there and we will make changes to satisfy you, the customer. Thank you. All right. Cool. All right, next up, Patricia, who's in my Platinum MBA program. She's from the great state of New Jersey. Great to see you. She started in January this year. So good morning, Chris. Hope all is well. It's great to see you. Great to see you. Now, if anybody here is on my silver, in my silver program, please look at the first lecture of your curriculum, because today what I'm going to do is, instead of a weekly 1 hour call with you all doing Zoom, I'm going to do a 2 hour call. So just look at the first lecture there. Thanks. And for anybody that wants to join the gold or platinum version of my MBA, just go to haroonmba.com. Our next class, our next 1 year class starts on Friday, September 30th. It's going to be 1 year every Friday from 9 a.m. until 3 p.m. my time. Yeah. All right. All right. Next up, Kevin wrote, hi, Chris. Hey, Kevin. Is there any ETF, meaning exchange traded fund, that would give exposure to the investment that venture capitalists do? These venture capital firms can make 5 to 20 times their money. Yeah. No, there isn't. And venture capital firms, what they do is they invest in private companies. And because these companies are private, you can't make an ETF for them because ETFs are a collection of stocks. Now, one thing I want to caution you guys about when it comes to venture capital is it's not as good as you think it is. Only 10 firms make a lot of money and the rest get the scraps, the other deals, right? And so the number one firm on the planet is Sequoia. You can go to my homepage, which is haroonmba.com, and at the top, search for Sequoia. And you'll see I did a vlog on why Sequoia materially outperforms all other venture capital firms. Yeah. All right. All right. Next up, Renveer wrote, hey, Chris. Hey, man. If a person buys a bond, meaning a debt instrument like a loan, if a person buys a bond and they sell it at a higher price in the secondary market, does the borrower now need to repay more debt than he had originally taken? No. It's just you selling it to somebody else, right? So I bought this, my son and I bought this on Amazon, right, for say 10 bucks. If I sell it to somebody else for 15 bucks, the person that made this and sold it to me is not on the hook for that. Yeah, it's the same thing. Yeah. Okay. All right. Next up, Kevin wrote, good morning from Lakeland, Florida. Great to see you, Kevin. Always great to see you. Kevin's in my MBA program. Moving on to Pulashi, who wrote, hey, Chris, how are you? I'm always great. Thank you. And thank you all for your comments for the illness I went through. I'm 99.9% better now. I went through COVID. It was rough. And then I had pneumonia and then just a heart issue. I was in the hospital. That's me trying to get sympathy. You know what that is? That's the world's smallest violin. Just kidding. But I haven't skipped a beat. Maybe my heart has. I continue to teach and stuff. But I'm feeling great. I'm awesome. Thank you. All right. And I'm standing. There's no chair in this office, man. All right. And the question from Pulasti is a person fully owned house and vehicle a liability or an asset? Some people are saying liability. What's your opinion on that? Yeah, it all depends on what percent you own of it. Okay, so for example, with this phone, if I buy it and for $1,000 in cash, that's an asset only. Okay, now the balance sheet equals assets plus liabilities and equity, and it has to balance. So this $1,000 phone balances because my equity in it is $1,000. Now, if I bought this phone for $500 and I got a loan from Apple for the other $500, then on my balance sheet, remember assets equals liabilities plus equities. On my balance sheet, it's still an asset of $1,000, but it's $500 liability, okay, a loan, and the other $500 is equity. So assets equals liabilities plus equity. My $1,000 asset I have equals the $500 I own in it, equity. Equity means ownership. Plus the $500 that I owe to Apple, the debt on this. Okay. And never try to memorize accounting statements and formulas. Otherwise, you'll get a D in accounting like I did when I took it at McGill University 8 million years ago. Try to understand these relationships. It's a lot of fun. And as I mentioned when I was talking about the 25 tips, try to rearrange the equations and think of the banana thing. Like one banana, one banana makes how many milkshakes? I know it sounds silly, but always think the denominator as being the number one. Always, always, always. Yeah. Okay. Moving on to Veer. 1 second. Sorry about that buffering, guys. I just switched to a backup Wi-Fi network. Okay. So the question is, what is going on with Japan devaluing their currency? How do they keep inflation stable? So the problem with Japan is Japan has 125 million people. And I love the Japanese economy. And I did Japanese equities when I worked at Goldman Sachs 8 million years ago. I worked on the IPO of NTT Docomo. I was a grunt. So I know a lot about the Japanese economy. The problem with the Japanese economy is right now they have 125 million people and the birth rate is negative. And by the year 2060, they'll only have 80 million people, right? So it's a big problem. The Japanese economy is not really growing. You know, people aren't getting married as much as they used to. The birth rate is negative. It's really, really sad. And because the Japanese economy is not really growing and there's not that much demand for products there relative to other G7 countries, inflation is quite low. It's only 2.5% in Japan versus close to 10% in other G7 countries. As a result of lower inflation, the Japanese government is not raising rates as much as other countries are. In fact, rates are basically zero there. So as a result, if a country's interest rate is lower and another country's interest rate is higher, then the country with a higher interest rate sees their currency go up in value, and the country with a lower interest rate sees their currency go down in value. And that's why the yen is getting hit really hard versus the US dollar. And it's really problematic for Japanese companies as well. Yeah. And if you want to learn more about the Japanese economy, Michael Porter, who's a brilliant Harvard Business School professor, wrote a book called Can Japan Compete? And yes, I think Japan can compete. But what he did was he analyzed the Japanese economy after World War II. And after World War II, of course, the Japanese economy was in a lot of trouble. And so what the Japanese government did was they created incentive programs, and they gave money to every sector in the economy except for two sectors. One was consumer electronics and the other one was autos. And the fascinating thing about that is the two sectors of the Japanese economy that have done incredibly well are autos as well as consumer electronics. And so the bottom line is free markets prevail always. I don't know what's going to happen with the Japanese economy in the future. I don't know how they're going to turn around. I really, really hope they do, because I'm a huge fan of Japan. And I think Japan can compete. Okay. Next question. Kurt wrote, hey all, good wishes to everybody. Good to see you, Kurt. And I think, Kurt, you graduated from my MBA program back in 2020, right? You think you work for Workday. Good to see you. Next up, we got Ali, who also graduated from my MBA program. Great to see you. Ali wrote, hi, Chris, greetings from Zambia. See you in the Silver MBA class. Awesome, thank you. And again, please look at the first lecture of the curriculum today for the 2-hour Zoom call we're going to do later on today. Thank you. Moving on to Kevin, who wrote, hey, Chris. Hey, man. I'm a student at a community college. Cool. I'm transferring to university soon. I'm an aspiring PM, meaning portfolio manager. You like to manage money. Cool. Will your financial analyst course go over important portfolio management items like generating alpha? Absolutely. But I do that in a lot more detail in my MBA program at haroonmba.com. All my courses have 30-day, 100% money-back guarantees. Now, for those of you not familiar with what alpha means when you're talking about finance, it basically means how much do you outperform the market by. And so big mutual funds, what happens is they're judged, and the portfolio managers there get bonuses based on how much they outperform the S&P or whatever benchmark it is. So if the S&P 500 is up 10% and a portfolio manager is up 11%, that means that portfolio manager generated 1% of alpha, or 100 basis points. Yeah. All right. Next up, Michelle wrote, hey, Chris, what do you think about Tesla selling 75% of their Bitcoin? Yeah. So Elon Musk is very controversial. And as we talked about in last week's webcast, controversy sells. And so what Elon Musk did was he allowed people to buy Teslas using Bitcoin for a while. And then he realized or decided that, hey, Bitcoin is bad for the environment, because a lot of people in China, for example, they still mine Bitcoin there. A lot of people will mine Bitcoin, and the electricity powering their Bitcoin miners, okay, or their devices, is coal. And coal obviously is awful for pollution. About a third of all pollution above the San Francisco Bay Area, here where I live, comes from mainland China. And a lot of it is due to coal. Yeah. But I think he's just being very controversial as well. Controversy sells. Have you ever seen a Tesla commercial? No. It's free PR for him. Okay. Let's see. Lucas, how are you? Thank you for joining the 99 cents get 5 free courses in my YouTube channel. You can click the join button. Appreciate it. And you'll see that some people have different icons, like a trophy. And basically, if you support my channel and you pay 99 cents, you get 5 of my great courses for free. Then you have that icon. And after you've been a member for a month, it changes from green to blue, etc. It's kind of fun. Thank you. All right, next up, Lala wrote, hey, everyone. Hi, Chris. I made it here. Great to see you again. I think you joined us last week as well for the first time. Great to have you. Moving on to Zoralina, who is from France, but she lives in Ontario, Canada now, and she has a crepe company she's looking to sell. She's in my silver program. Zoralina wrote, good morning, Chris. Hope you're doing well today. Thank you. Likewise. And then you wrote, I like your new hairstyle. Thanks. I'm trying to get a little bit taller, you know, as I age. And you know, I think I'm probably like 6'3" now. I don't know. We'll see. Yeah. Yep. I have short hair. And for years, you guys have seen me online in my courses, whatever, with short hair. I cut it myself. And then I started growing my hair, and I was brushing it, and it was just, I'm like, dude, I have curly hair. So I'm just going to let it go curly, and I look like a frickin' poodle now. Yeah. All right. All right. Moving on to Ali, who wrote, it's the same comment twice. How are you? All right, Manas from India wrote, good morning, my dear mentor. Chris, please. Thank you for the emoji there. Hope all is well. Likewise, buddy. And congratulations on publishing yet another course. I saw it. That's awesome. Then you wrote here, can you talk about a future of options in the cryptocurrency market and Web 3.0 and how it can be a really effective tool for the future? Yeah. So the options market in cryptocurrencies is just getting developed right now. I don't recommend doing options on individual cryptos. If you want to do options with cryptos, just buy and sell calls and puts, or buy and sell puts, or buy puts and buy calls. Don't sell them because unlimited loss potential. But I think if you want to do it, I would do it on ETFs. And for those of you that are in my MBA program, if you go to FA44, that's Finance and Accounting Semester 4, Class 4, I have a 30 or 40 hour elective I just added on how to do all this with cryptos and all the other stuff. Yeah. It's developing, yeah. And I mentioned this last week, and this is really important for anybody that invests in cryptos. I'm begging you, please, if you have cryptos, don't leave them online in hot wallets, meaning on places like Coinbase. Put them in a cold storage wallet instead, like a Ledger Nano, because a lot of these companies online are going bankrupt, and you can't get your money back. Do not keep your money in hot wallets online. Keep them in cold storage wallets. Yeah. Okay. Now, in terms of Web 3.0, so the best investments in history are platforms. You want to own the road. And so Web 3.0 is basically virtual reality. And Meta is going to push us towards that becoming a reality. Same thing with Apple. Now, if you do a search online for Apple AR, meaning augmented reality, Apple's got this AR product coming out next year. It looks pretty cool. And according to people familiar with the matter, it's coming out in January. Okay, it's basically just going to be this really cool visor. It's pretty thin. Every company is getting into it. Microsoft got into the market with HoloLens, which is not doing that well. Google's in the market as well with, well, they tried Google Glass. Remember the glasses? But people called them glass holes when you're walking around with them. But Google also invested in Magic Leap, which is an AR/VR company. And so all these companies are trying to get on board to try to make Web 3.0 a reality. And nobody knows exactly what it's going to look like. And penetration is pretty low. So there's only like 12 million of these things out. This is Oculus One. And that's not that many, right? And so I think the way it's going to work with augmented reality and VR and Web 3.0 is people are going to use their arrow keys, okay, initially, and then they'll also use a visor. And I'll show you exactly what this means. So if you go to mbametaverse.com, I did a case study on this. And I actually did a webcast. And you can click here to watch the replay of this webcast. I did it 6 months ago or so. We did this weekly webcast from the metaverse. And this will give you a good understanding of what the metaverse is all about, okay? What you can do is you can use Oculus to watch this, okay? Or what you can do is use the arrow keys to walk around. And apparently in the future with metaverse, nobody has legs. Yeah. All right. But it's going to happen. It'll become self-fulfilling because there's so much money going into the sector. Yeah. Okay. Next up, Michelle wrote a couple of videos ago, and then you wrote, I'm a big fan of yours, by the way. Thank you. Appreciate that. You said Ronald Reagan was your favorite president. Will you tell us why? Yeah, absolutely. Absolutely. So when I grew up in Canada, we were in the midst of the Cold War. And by the way, we just started the second Cold War back in February. My kids asked me, when is this war going to end? And I said, it's not for decades. But what Ronald Reagan did was he stood up to Gorbachev. Okay, and this is a piece of the Berlin Wall that I got from Checkpoint Charlie in 2019 at Berlin. He stood up to Gorbachev. And remember that epic speech? He said, Mr. Gorbachev, tear down this wall. And he and Lech Walesa from Poland and many others beat communism, right? And I despise communism. I hate it. I hate it when I have students that can't reach their full potential. And so that's one of the reasons I love Ronald Reagan. He also believed in small government, right? I don't believe in big government. I believe in survival of the fittest. I believe in capitalism. Now, don't take that the wrong way, okay? Like I'm not always a Republican, okay? It depends on who the candidate is. I vote Democrat, I vote Republican sometimes. But Reagan stood up to communism, and I love that. Absolutely love that. And Boris from the United Kingdom, Prime Minister, who's stepping down, check out his speech he gave in the House of Commons yesterday. I thought it was great, and I will miss him. Yeah. Okay. Next up, Manas wrote, Elon sold Tesla Bitcoin for a loss, maybe. Why is that? Is he bearish on Bitcoin and Web 3.0? I don't think he's bearish on Web 3.0 by any means. But I do think that when it comes to Bitcoin, because he runs a company that's supposed to make the world a better place in terms of zero carbon footprint, he can't really accept Bitcoin, because when people mine Bitcoin, especially in China, they use coal mines to do it for electricity. Yeah. And it's good PR for him to talk about that sort of thing. Okay. And then Manas wrote, Web 3.0 devices like VR headsets are way too big now to be used daily. Is there a company making user-friendly devices? Yeah, let me show you Apple. So this, what I'm going to show you, people found out about just due to patents, okay? And so when a company files patents, you can find out what they're thinking about longer term. So let me show you Apple's VR headset, or AR headset, coming out in January. Apple AR. Okay, so let me go to images. I'll show you what it looks like. Looks pretty cool. All right, this is the one here. Yeah. And so people, the way that this leaked was, Apple had a bunch of patents, and also there are component companies in Southeast Asia making inputs for this, and it leaked to the marketplace. But it's going to look something like this, and this here looks just like at the back here what Apple has with the AirPod Max. Okay, the way you put it on your head. So this is Gen 1. Apparently Gen 2 will come out in 2024 as well. Yeah, it looks like an iPhone here as well a little bit too. So it'll be interesting to see how that all pans out. I think if anybody can do it, I think Apple can, in terms of making the size smaller, etc. The problem with VR, for me at least, and I've tried all the headsets, is that I get really dizzy after half an hour. And so I think AR is probably going to win over VR because you get less dizzy. And I think if Zoom, like what Facebook did, rename themselves Meta, made a lot of sense. If Zoom did something similar, to the extent that they said, we're betting the future of our platform on virtual reality and augmented reality, I think the stock would double within a year. It'd be a great investment, because the whole two-dimensional aspect of using Zoom, it's kind of, I don't know, it's a lot of people had mental health issues during COVID, and God bless them. I pray for them, because the only way they spoke to people out there was using Zoom. Now, I think that if Zoom did some sort of augmented reality version of that, where you really feel like you're there talking to people in group meetings, etc., I think it'd be a much better user experience, and it's coming. The problem is right now, and for those of you that play FIFA and video games online, Xbox, PlayStation, etc., the problem is that, yes, everything looks lifelike except faces. Nobody has nailed that yet. Yeah. Okay. And then next question is, the war is still on for almost 150 days. How much will it affect the market? And by the way, Russia launched its own YouTube called Writeup, and it is a media hub. What are your thoughts there? Yeah. So I hate anything controlled by government when it comes to communications. As you all know, I'm a little bit more of a libertarian. The war is not going to end soon. It's going to go on for decades. It is. And Putin, favor. There we go. All right. We are back. So the problem with Putin, and I despise him, is that he did his thesis in undergrad when he studied geology. He did his thesis on, can the Soviet Union control commodities? And if they do, what would that mean to the power of the economy? And so he's thinking very long-term with respect to his invasion of Ukraine. I think he's going to invade several more countries, including Kazakhstan and all the others, to try to reassemble the USSR. Yeah. Very problematic, yeah. In terms of them having Writeup, which is their version of YouTube, again, I'm not a fan of anything controlled by governments. Yeah. Okay. Next up, Renveer said, Chris, is there any way I can access a Bloomberg content for free? No, and you don't need to. Now, I used to pay thousands of dollars every month for my analysts in my companies to access Bloomberg, and I worked at bigger hedge funds where we'd spend $100,000 to $200,000 a year on it. I realized you can get all that stuff on Yahoo Finance for free. All of it. So nobody pay for Bloomberg ever, please. Yeah. And if you want to learn how the world works for free and read websites for free, I'm going to show you one way to do it. Now, I think everybody should read the Financial Times because it's like the Wall Street Journal, except it's more global in nature. Now, when you read the F.T., only read about macroeconomic stuff. Don't read about what stocks to buy. And if you click here to read this, it's going to say, hey, man, you got to pay. No, you don't. And here's why. You copy this, okay? Copy just the text. And then you go into a private window here, okay? And then you paste it, okay? Then you click, and now you can read it for free, okay? And the reason this happens, it doesn't work with all websites. The reason this happens is because the F.T. does not have a sophisticated SEO strategy. And so if they didn't allow this to happen, then you wouldn't be able to search and get Google results for the F.T. articles. Yeah. And I'm not sponsored by anybody. I never will be. You are my customer only. Yeah. The second I start taking sponsorships and making this all about money, it's game over. And I put companies first and not you, the student. Yeah. All right, moving on to Manas, who wrote, Udemy has been banned in Russia, and Udemy stopped its services this February. How is that okay for Russian students? Yeah. So it's the U.S. government has decided that, hey, American companies cannot do business in Russia, right? So it's basically the U.S. government's decision. In terms of my thought process on teaching in Russia, I have a lot of Russian students. I have a free course that's in Russian that I made, it's translated, that teaches you how to make courses online. Because I think all problems in the world can be solved with online education. And that was the subject of my TEDx talk, which you can watch on my YouTube channel. Now, I gave away a full scholarship to my Platinum MBA program to a student that's in Moscow right now. He's a great guy, and he's an important part of the program. Yeah. Okay, moving on to Nintendo, who joined my YouTube channel. That's why you got the green icon there. Thank you for the support. Nintendo wrote, hi, Chris. How are you today? I'm always great. Thank you. Always great. Yeah. And I got rid of the chair in my office. I'm feeling a lot better. And then you wrote, I was wondering, what do you think about the little book that still beats the market? Yeah, I've not read that one. Sorry. Yeah. And I think you can all beat the market yourselves without reading online what stocks to buy from the pros. You guys are all the pros, and I provide you with a template today to help you beat the market and 25 tips. Yeah. Don't rely on anybody to ever tell you what to buy. Okay, next up, Kevin wrote, how important is liquidity when it comes to diversified ETFs like F.V.T? Yeah. Liquidity is crucial. Never ever buy a stock that you can't get in or out of within an hour. I want you all to be long-term investors, but the reality is you might need money. Okay. And the problem with buying illiquid stocks don't trade that much, is they're hard to sell, right? And when you buy them, you're like, oh my God, I'm making money. Well, it's partially because you might be, and when I say you, I mean all of us, we might be pushing the stock up, or the ETF if it's a liquid. Yeah. And remember, illiquid stocks own you in a down market and not vice versa. In the fall of 2008, a lot of hedge funds went belly up because they couldn't sell illiquid stocks fast enough. Moving on to Norm MacDonald. Hey, Norm, how are you? Good to see you. I'm smiling because you remind me of Norm MacDonald, who's a great Canadian comedian from Saturday Night Live, just passed away. God bless him. But Norman wrote here, how do you value a personal services business, such as a law practice, an accounting practice, and a dental practice for sale? Yeah, great question. What if one owner's business and the other owner is leaving or retiring? Yeah. So if you have two owners, you can buy out the other one if you want to. Now, the way to value all companies is based on your expectations of earnings in the long run. Okay, now it might be hard to slap on a PE multiple on a private company, but what you can do is you can do a discounted cash flow analysis, meaning figure out how much money the company's going to make every single year and discount that using the appropriate weighted average cost of capital, which I teach in my MBA. I'm so sorry about this webcast today. All right. I'm so sorry about that. I've got a couple of networks here, but when the power goes down in California, it's just nothing I can do. Yeah, okay. But I've got a backup. We're good to go. Okay, so Norm, the way you value a company that's private is what you do is you look at similar companies that have recently sold in your sector, and you look at similar valuations, like price to earnings, but you'll call it an EBITDA multiple, or you can discount the cash flow, future cash flow you think the company can make into today's terms, which I teach about in my MBA program. Yeah. Okay. Next question is from Kevin, who wrote, have you ever played LA Noire? It's my favorite Rockstar game ever. I have not, but I have downloaded it and I will try it. It came out years ago. I'm currently playing the latest Max Payne game because the producer of that is the same guy that produced Red Dead Redemption 1 and 2. Yeah. Moving on to Satons. Mark, how are you? Mark I graduated from my Platinum program last year. He's based in Detroit. And you are correct. I asked, what movie is The Banana in the Tailpipe from? And it's Eddie Murphy in Beverly Hills Cop. An oldie but a goodie. You are correct. And Patricia, you're right as well. You guessed correctly. Nice. Moving on to Pride. And Pride, it was great exchanging emails with you. Welcome back. And my thoughts and prayers are with what we talked about in that message. Always thinking of you, Ken. So Pride wrote, can you please tell us how you met the Haroon Education Ventures Opportunity Manager, also known as drumroll, the night at the Maxime Restaurant, Paris. Oh my God. Okay, so you're referencing something from my Silver MBA program. That's right. I had a character. I have multiple personalities. And I wrote a poem for you too with my multiple personalities. Roses are red, violets are blue. I'm a schizophrenic and so am I. Okay. So yeah, this was it was one of my characters from Maxine's Restaurant in my MBA program. That's right. Thank you for remembering that. Yeah. I'm such a goofy guy. Okay. All right. And you guys might notice there's somebody that's spamming stuff here. I blocked that person. I reported that person to YouTube as well. Yeah. All right. Moving on to Gonzalo, who wrote, hey, Chris, I've done a couple of your Udemy courses. Thank you. My brother is applying to work in venture capital or to get financing from a VC firm. I was hoping I could get some feedback on our pitch deck. Would it be okay to email you the pitch deck? Yeah. I would love to help. I'm so sorry. I'm so inbound with this stuff. Just ask me questions here on the weekly or join my MBA program if you want to, and we can do a lot of calls that way. Yeah. Thank you, though. Moving on to Alex, who wrote, hey, Chris, I do honestly think it's worth it do you think it's worth it to contribute to a health savings account plan? Yeah. I'm not a big fan of investing in stocks through insurance companies or healthcare companies because there's a lot of hidden fees, right? Tons of hidden fees. I prefer you to buy ETFs instead or single stocks if you have time to do the research. Yeah. Okay. Moving on to Kels, who wrote, I love your way of teaching. I'm a fan. Thank you. I appreciate it. And thank you for all putting up with me over the past couple months with this illness. Again, I am better, 99.99% better. Thank you so much. Yeah. Okay. And then Robin wrote, looking young, prof. Thank you. It's the hair, I guess. My kids have the same hair as me too. Yeah. And then Ruby. Hey, Ruby. It's been a while. Hope you're doing well. Great to see you. And I think I met you last December at my graduation here in San Francisco. You're right. It's been a while since I've been able to join. Happy to be back. It's great to have you back, and thank you. Okay. Harsh wrote, I want to talk to you. Sure. Yeah, the best way to reach me, if you want to get me over Zoom, is just go to the first lecture in the Silver MBA program or join the Gold and Platinum program, where I do hundreds of hours of one-on-ones or a group conversation stuff, Zoom, etc. Yeah, per year. Now, Ruby wrote, what do you think of dividend reinvestment programs or stocks? Yeah, I think they're great. I think it makes a lot of sense. Basically, what that means is whenever you get a dividend, it gets reinvested in the stock or other stocks. As long as you're very, very long-term focused in the company and as long as you do the research yourself, as we talked about earlier today. Yeah. And if you want, because you're in my gold program, or platinum, I think even, we can do one-on-one calls and I can help you out with your investment write-ups, etc. Yeah. All right, moving on to Ahmed, who wrote, hey Chris, hey man, on your Udemy course you mentioned that you're not a fan of discounted cash flow. That's right, when valuing a company, as this was mainly a tool for value investing. Yeah, so let me explain that. So the problem with valuing companies using discounted cash flow is that there's a lot of variables that you have to put in. And if I told you 1 plus x equals 3, what's x? It's 2. If I told you 1 plus x plus ET cartridge plus board equals 3, what's x? We have no idea. So there's too many independent variables when it comes to discounted cash flow, which means garbage in, garbage out. Yeah. But I still teach it because you have to think about cash flow in the long run when you start a company and invest in a company. And then you wrote, Warren Buffett is arguably the most successful investor of all time. He is. Could you advise why you're not a fan of value investing? Yeah, it's a choice, right? And so it gets really contentious, man. And as I mentioned, I think it was in tip number 2 earlier today, you're either a value investor or a growth investor, right? Not in between. Never invest in a company that's stuck between growth and value, as I explained earlier. Now, value investing, because I love technology stocks and 5 or 10 baggers within a decade, and I worked in VC and Goldman Sachs and Citadel in the hedge fund market doing tech stocks. I'm excited by growth. I'm just not a value investor. I respect Mr. Buffett tremendously, and I teach how he invests in my MBA program as well. I provide you with a menu of options. I'm just a growth investor. Now, a lot of people, especially younger people, when you're in university, and I was this way too, you start out as a value investor because you're taught, hey man, buy cheap stuff. And yeah, I like to buy cheap stocks. But once you start creating financial models and understanding the power of earnings growth and leverage, you can forecast what you think earnings will be in 5 or 10 years and base your target price based on that future earnings number. It's a riskier way to invest. It's just the way I am. And Warren Buffett, when I was at Columbia doing my MBA back in 99 to 2000, Warren Buffett, he also went there. That's the only thing we have in common. He taught one of my classes, right? He came in and guest lectured with his wife. God bless her, she passed away. But I remember in the class at the time, there was one of my classmates, put his hand up and pitched a stock, a tech stock, to Warren Buffett. And he was about 90 seconds into his pitch. And Warren Buffett, very grandfatherly, very politely said, son, I'm going to stop you right there. The reason I wouldn't look at a company like that, it was a tech stock, is because I don't know where that company's product portfolio is going to be in 2, 3, or 4 years. I just don't have that visibility. And I don't feel comfortable investing in something I don't understand. And people in the class thought he was crazy at the time because, tech stocks were taking off. And that was, I think, December of All right, and I'm so sorry about that. Again, it doesn't happen that often. I live in the technology capital of the world, and I can't get electricity to work here properly. Yeah, it doesn't happen that often, but it happens sometimes, yeah. So anyway, I was talking about Warren Buffett. He only invests in what he understands. And he taught one of my classes at business school years ago. And one of my friends or a guy in the class was pitching a tech stock. And Buffett told this person very politely to stop pitching it because he didn't understand where the company was going to be longer term. He likes good long-term visibility. I'm so sorry about that. And I'm sorry if it got butchered and you didn't get the full answer. If you didn't, let me know, please. Thanks. Okay. Next up, Kells wrote, did your financial analyst program? Hi, Chris. I did your financial analyst program, and I loved it. Question, thank you. How many ways are there to forecast a target price the way hedge funds do? Is there only price earnings, peg, etc.? What are other methods? Yeah. So another method people use, aside from the ones you mentioned there, is discounted cash flow. I'm not a big fan of that because there's just too many independent variables. But people look at EBITDA multiples as well, which is basically price to earnings before interest, tax, depreciation, amortization. Yeah. And people also look at value investors like Buffett look at price to book, right? So remember the banana thing, price to book. For every $1 in book value of the company, what are investors paying? And if the number is below 1, it means the company is worth more dead than alive. Like you could shut down the company and sell off its assets, right? Which means this is a great investment. Yeah. And so Warren Buffett used to always say, look at companies with a price to book of 1 or lower. He's kind of changed his tone with that recently, though. But it's another way to value a company if you're a value investor, that is. Yeah. And there are hedge funds that are value investors. Yeah. And if anybody wants to work in a hedge fund market, I only recommend working at hedge funds that have a long-term investment time horizon. Basically what that means is any tiger cub. And Tiger was a very successful hedge fund launched by Julian Robertson back in the 80s. And a lot of portfolio managers I know well, actually, that work for him. They started their own hedge funds. And his hedge fund was called Tiger, and that's why they're all called Tiger Cubs. Okay, so do a search on Chase Coleman and a bunch of others. They're great. Okay. Moving on to Kumar, who wrote, I only see the second part of this, what you entered in here. You can't put in internet addresses otherwise, or web address, otherwise it blocks them. So sorry about that. So please just rephrase the question. Thanks. Okay. All right. Next up, I got Hari, who wrote, "Hi Chris, how do you use NFTs for copywriting a book?" Yeah. So NFTs, for those not familiar with it, basically means digital art. Okay, and digital stuff. And NFTs are usually created on the Ethereum platform. Okay, so I do have an NFT course coming out. I'm working, and add it to my MBA. I'm working with this brilliant guy here in the Bay Area named Trevor Cochran. We're about a third of the way through it. We're going to start recording soon, and I'll teach you how to create an NFT from scratch in that course. Yeah. Okay. And then Gordon has a question about what about depreciation on the phone. So earlier there's a question about explain assets versus liabilities. And so I said, if you have a $1,000 phone that's an asset and you own half of it, assets equals $500 in debt plus $500 in equity. Assets equals liabilities plus equity. Okay, it has to balance. Equity means ownership. Okay, now with respect to depreciation on the iPhone, that will all be taken care of in the equity section of the balance sheet through what's called retained earnings, because that's where you get net income plugged in from the income statement. Okay. Next up, Kevin. Great to see you, and thank you, Kevin, for supporting the channel and subscribing there. I appreciate it. Joining the channel. You wrote, "I've learned from many professors that Wall Street means left politically. Is this true?" Yeah, let me explain that. So on the political spectrum, right means you're Republican, left means you're Democrat, right? Meaning you're more left wing. And Wall Street is more lefty. Well, the way it works in the United States, it is what it is, and don't get mad at me for saying the truth. The left coast, the West Coast, is more Democrat, and the Northeast, meaning New York area, is also more Democrat, right? And you have a lot of great Republican states in the middle, and great Democrat states as well. Yeah. So New York is usually a little bit more liberal, a little bit more Democrat. Yeah. And what happens also is, and we see this with movie stars, and it's bizarre. People start out as Republicans, they make a ton of money, and they become Democrats because they want to kind of give back or something. It's just, it is what it is. Yeah. But I think a lot of people starting on Wall Street are probably more Republican, and then they change a bit once they make a fortune. Yeah. Yeah. Oof. I ruffled some feathers there for sure. Yeah, for shizzle. Yeah. All right. Next question is from Alex P., who wrote, "Chris, do you like spicy food in general?" I do. I like Red Hot and Tabasco on everything. And we do a case study on Tabasco in my MBA program. Tabasco is one of the best privately held companies in the world. They're so cheap. What they do and what's embedded in the subfabric of their DNA is that the Tabasco bottles, if you look at them, they look like perfume bottles. And the reason is because when they started Tabasco, the company, they were so cheap They reused perfume bottles. They bought them in the secondary market. And that's just the way they are today. It's interesting. Yeah, they're still cheap in their corporate culture. Okay. Now, when I go and get dosa, which is the best food on the planet, from Indian restaurants, I always ask for the hot sauce on the side because I'm a wimp when it comes to some hot sauce. Yeah. Moving on to Fems, who wrote, Chris, I'm joining my first live after buying the financial analyst course and enjoying it. Thank you so much. I hope you appreciate this. Yeah, thanks. And I'd love to have you in my MBA program as well. Go to haroonmba.com to learn more. Thanks. Okay, and Gonzalo wrote, thanks, you're most welcome. We've got a Manas who wrote, thank you for everything, my mentor. Chris, please. See you next week and forever. Eat dosa and live well forever and ever. And thank you for the emojis. My favorite ones are these ones, obviously. God bless you. Thank you. Next up, we've got Alex, who wrote, do you think the IRS, which is the American tax agency, government agency, the Internal Revenue Service, do you think the IRS will ever get on top of filing tax returns from previous years and current years, as the IRS seems to always trail behind the workload? Yeah. Well, I don't want to say anything because I don't want to get audited. Yeah, no, I'm just kidding. No, they'll catch up with you. They'll find you. Yeah, and people don't understand the IRS has very sophisticated software algorithms that can find out if people are cheating on their taxes. Kind of like how the Securities and Exchange Commission has a very sophisticated artificial intelligence-based algorithms that can tell if people are doing insider trading. Yeah. Okay. Moving on to Elena, who wrote, hey, Chris, greetings. Great to see you. Likewise. Thank you. What is your opinion on the best existing option to save money for kids' education? That's a great question. So the second your kids are born, or even right before they're born, you want to start putting money away for them. Okay. And what you can do in most countries is there's educational savings accounts that work just like retirement savings accounts. And so what you want to do is you want to put money into your kids' savings accounts, educational savings accounts, every single year. And then if they choose to go to university, then you take the money out then. Okay, and so what I recommend is what Warren Buffett says, which is you want to spend what is left after saving instead of saving what is left after spending. And so if you can do it, I know times are tough for all of us now, with your paycheck, have money taken out in every paycheck and put into ETFs, for example, for your retirement savings program called the 401k in America. And also have money taken out for your kids' educational savings accounts. And I humbly I want to be humble, but I'm going to go there. I paid off my kids' education like 10 years ago. I maxed everything out. So it's all covered. And there's great tax breaks for it as well. And nobody should ever do their own taxes, please. Everybody hire an accountant. Doing your own taxes is like saying, I'm going to do surgery on myself. The tax code changes all the time. And accountants can find you great tax breaks and keep you out of trouble as well. And a lot of people in this call are probably thinking, Chris, how do I find a great accountant? Well, there's no Yelp for accounting. It's a very fragmented industry. The best way to find a great accountant is to ask your successful aunt or uncle or colleague at work, somebody successful, and ask them to introduce you to their accountant. Don't do it 1 month before taxes are due. Do it well in advance. And I promise you, it's one of the best investments you'll make. And there's a reason why very rich people, they pay $1,000 an hour for tax accountants or tax lawyers to help move their money around. It's painful, dude. It's a hard investment. And when I talk to my lawyer, he speaks really, really slowly. It drives me crazy. But it's worthwhile. It'll save you money in the long run. Getting your own accountant. Please do that. Yeah. Okay. All right, next up, Ahmed wrote, I got the answer. Thank you. Awesome. Good to see you. Moving on to Nikki, who wrote, hi, Chris. Thank you for teaching. My pleasure, and thank you. Should I invest generally in stocks in the S&P or companies that have just launched and gone public and potentially growing like Amazon in the 90s and create financial models? Yeah. So regardless of what you invest in, I want you to do a thorough investment write-up first, using the methodology I explained earlier today. And if you're in my MBA program, I go into much more detail on this. always be very long-term focused. Now, when it comes to IPOs, I want you to be careful. And I want you to read the IPO document thoroughly, as I showed you earlier today. You can go to sec.gov and read up on the IPO documents on all companies going public. Now, by law, they have to file these things several months before they go public. And nobody reads them, but you got to read them. And if you don't know much about finance and stuff, you can just do a search on competition, the risk, the management team, etc. But in my MBA program, I teach you how to do a full research report on companies like this and all companies and value companies using a long-term financial model. Yeah. Always do the work yourself, please. All right. Whoa. Kevin wrote, people say Larry Fink, who I think BlackRock is the company he owns. I think his son had a hedge fund. We used to compete years ago. Larry Fink, people think Larry Fink has more power than POTUS. POTUS standing for President of the United States. What are your thoughts? He's a very, very wealthy man. BlackRock has over $4 trillion in assets. A lot of it is fixed income, bond related stuff. So he's very, very powerful. I don't think he's more powerful than the President of the United States. I don't think any rich person is in America. People used to think that Rockefeller was more powerful than the president. Maybe he was at the time, but there are a lot of checks and balances in place. There's no way he's more powerful. Yeah, that's a great question, though. Yeah, interesting. Okay, great. You know what I'll do? I'm going to open up Zoom. Do you guys want to do Zoom? All right, let's do Zoom. Okay. So I never do this, but give me 1 second to tee this all up, okay? All right, hold on a second. And I'll give you guys the way to join the Zoom call as well. Okay, so Zoom right here. Let me copy this link for you guys. Allow. Okay, give me a second here. I am going to open up Zoom. I never do this, but this will be fun. Why not? Screw it, let's do it, as Sir Richard Branson used to say. All right, now I'll tell you guys how to join Zoom if you want to. There's a bit of a delay in the webcast, so it might take a second. So let me go into my YouTube panel here, and I'll show you what goes on behind the scenes. All right, and I have to sign in. So let me actually go into a non-private window. YouTube. And yeah, screw it. Okay. Great. And what I'll do is I'll paste the link here. Yeah, screw it. Okay. Great. And what I'll do is I'll paste the link here. There you go. Whoa, I'm getting dizzy. Look at this. All right, hold on a second. So let me shut this down here, or go back at least. Good. And if you want to join Zoom, join now if you want. Yeah, and I hope that works. Let me know if you guys actually see that link. Okay, good. It does work. Great. All right, this will be fun. I hardly ever do this on my weekly call. All right, let me go to admit. And, oh, wow, a couple of people. Nice. Okay, let's do this. Let's go to gallery and let me get rid of myself in the corner. Here we go. Great. Whoops. Awesome. Okay. All right, guys, unmute and ask me questions if you want to. I've got Kevin and Chukun as well. Yeah, if you have questions, join me. I rarely do this, but this will be fun. Yeah. Hey, how are you? Whoa, a lot of people are joining here, so this will be fun. We got Michelle. Excellent. Excellent. How are you? Good to see you. And so what we'll do is, if we only have a handful of people, just start talking. If we get tons, you can put your hand up. But whoever has a question, and you don't have to talk, you can just be here if you want. Totally up to you. But it's great to see you. And this is going to be awesome, putting a face and a voice to the name as well. So if anybody has a question, please go ahead. And thank you. And remember to mute your YouTube, mute the YouTube video as well, because we'll get feedback if you don't do that. Thanks. Michelle, how are you? Oh, and you're muted when you first join, so you have to unmute yourself if you want to ask a question.
I knew that. Hi, Chris.
Hey, how are you, Michelle? Where are you based?
San Antonio, Texas.
Excellent, excellent. Don't mess with Texas. Do me a favor. Can you bring your tax code here to the Bay Area?
I know, right?
Yeah.
Yeah, I love Texas.
Yeah. Don't mess with Texas, right? Yeah. Awesome. Great. Excellent. And tell me a little bit about yourself.
Well, oh God, my camera got blurry. So I am a retired history professor, which is one of my reasons for asking you about Ronald Raegan.
Oh, cool.
That's interesting. I really need to know that.
Yeah. This is that piece to Berlin Wall.
Yes, I love it.
Yeah. It wasn't this beautiful when it was up. It was all gray. Otherwise, they would have left it there. Yeah.
Oh, okay. Okay. I've been a land development consultant for about 20 years, and but I found a niche that I'm working on through Shopify and other things that I'm really excited about. And I actually found you with crypto. I was getting interested in crypto a while back, and now I have like 20 of your courses in my Udemy account. Yeah, and I'm really eyeing that MBA course.
Yeah, it's a lot of fun, and you can binge watch it in 30 and get your money back in 30 days. Yeah.
Right. Yeah.
My marketing team hates when I say that. Yeah.
Yeah. So I just love watching you. I just think you're so smart and love your views and the way you lean and
thank you.
Yeah, love it.
Thank you. I appreciate it. Thank you. And you like my shirt?
I love your shirt.
Is that cool?
My daughter came in and said, "Oh my God, I want one. I'm gonna go make one," because she knows how to do the press thing. So she's
cool.
She's a shirt just like that.
Yeah, awesome. Yeah, and I actually, when I saw it, my first thought was that great movie Starsky and Hutch with Owen Wilson, Ben Stiller, and in the movie Ben Stiller keeps saying, "Do it, do it, do it,
do it."
Yeah. Excellent. Well, it's great to have you here. Thank you.
Oh, thank you. Good to be here. What a treat.
No,
yeah. Treat right now. Yeah.
It's fun. I never do this with the general session every week, but it's fun. It's fun. Yeah. Maybe I'll do this more often. Yeah. Huh.
Yeah.
Cool.
Why not?
Cool. Excellent. Yeah. Excellent. And what about those paintings behind you?
Oh, these are my 4-year-old granddaughters.
Oh, cool.
Got some little Van Gogh. And,
I like it.
Let me show you one I haven't hung up yet. Hold on.
Cool. It's gonna be Picasso-like, right?
Yeah. So can you see this one?
Oh, nice.
Yeah. So I'm getting ready to.
Very cool. Very cool. I wish I kept all my kids' drawings. I used to put it in this big folder, and I can't find it. It's somewhere in the house. But that's worth more to me than any art. Yeah.
Oh, I know, right? Yeah. I still have all my daughters. Yeah.
That's awesome. Yeah. Very cool. Very cool. Nice. Excellent. Well, it's a pleasure to meet you, Michelle, and thank you for the support and all that great stuff. Awesome.
Oh, the pleasure's mine. Really. I'm just thrilled to death right now.
Thank you. Awesome. Thank you. I appreciate it. And my uncle, so I'll tell you a story about my uncle and Google. So my uncle, God bless me, passed away, but he lived in Dallas for years. And in 2007, I went down to go visit him. I was at a Goldman Sachs conference, actually. Goldman sponsored some conference. And I went out to dinner with him. And he didn't have any money at all. And he had this carpet cleaning business. And when the bill came, dude, he grabbed, I tried my best to grab the bill. Of course, he paid for it. There's pride and everything, right? It was $100. And I said, don't, my hedge fund, it pays for it, right? It's an expense account. He goes, no, Chris, I will pay. So he paid. And he told me about his business wasn't doing well. So what I did was, without telling him, I went out and I took that $100 and I bought Google ads for carpet cleaning in Houston. And his business took off. It was amazing. Of course, I never told him, but he called me. He's like, Chris, you're good luck. Yeah. So, yeah.
Great.
Yeah. It was easier back then with Google ads. It's a lot harder now, more competitive. Yeah.
Oh, yeah.
Very cool. Awesome. Cool. All right. And actually, it was when I was in that conference, it was a Goldman Sachs energy conference in a boardroom, Chelsea Clinton sat beside me. And my buddy had just gotten up to go to the washroom, and I actually had to tell her. I said, I'm so sorry, but my friend is sitting there. Yeah. So yeah. But she was really well spoken, unbelievable. She worked at a different hedge fund in New York. Yeah, very well spoken. Yeah, impressive. Yeah. Yeah, cool. All right, Shakun has her hand up, and if I mispronounce anyone's name, please tell me. With my last name, people say heroin, all that stuff. So, and I apologize if I am. Thank you.
No need to apologize. I think you're saying it just right.
Perfect.
And I do want to say that I'm a fan. I would say I have access to many of your courses. And excuse my camera. This is my personal laptop, so it's an older one.
It's good.
It's not the best camera, but yeah. So I actually have access to many of your courses.
Thank you.
Via Udemy as well. My company actually provides business Udemy access, and I am such a fan. I cannot say thank you enough for all the thought you put into your courses. I've started many of your courses already.
Thank you.
And I'm local to the Bay Area, and I have attended a few of your YouTube sessions earlier and kind of asked you a few questions as well. So maybe just, and as I think as Michelle mentioned earlier, I'm definitely eyeing the MBA, but I'm trying to manage my time. So my question is, you obviously have a busy schedule, you have family, you're obviously, working many hours a day, putting courses together, but you're also trying to keep yourself up to date on the latest tech trends.
Yes.
So that you can continue to provide new content to your courses.
Yeah.
And I would say that, probably a lot of folks agree tech changes a whole lot pretty frequently, and you do have to put in good effort to keep yourself up to date. So question is, how do you do that? What is your recipe on that front? Because while, we all try to do it, I try to do it at nights after work and after the family is put to bed and so on. Like, what would be your tips and recommendations for folks who are trying to continue to learn while handling their regular day jobs and family responsibilities?
Yeah, that's a great question. Thank you. So I don't waste any time. So what I do is in the morning, like when I showered this morning, I listen to this. Alexa, what's the Wall Street Journal news today?
From the Wall Street Journal. Not running your business on NetSuite is like trying to sink a putt with a cap pulled over your eyes.
I'll get to the point in a second.
29,000 businesses already use NetSuite.
You hear the volume's louder in the ads?
Head to netsuite.com
I hate when they do that.
/minute for a special one-of-a-kind financing
But this is
offer.
you got to listen to this. Hold on.
netsuite.com/minute.
Here's your midday brief for Thursday, July 21st. I'm J.R. Whalen for the Wall Street Journal. President Biden has tested positive for COVID-19.
Alexa, stop. Yeah, so and I heard about that. He's taking the medication already. It's a mild case, he said. But when I listened to it this morning, it's a little bit different. They talked about Amazon buying One Medical. And so what I did actually was I walked outside and I did a vlog on my thoughts on that. And I published a vlog earlier today. So everything I get is for Audible based. Okay, so I listen to that in the morning. Okay, when I'm getting ready. Also, if you want to listen to one tech podcast every week, which is amazing, you listen to This Week in Tech, TWIT. It's 2 hours long. It's broadcast live on Sundays, but you can get the podcast Monday mornings. It's amazing. And it's done by this guy named Leo Laporte. It's very entertaining as well. It's fun. Yeah, and I thoroughly enjoy it. So you can do that. Other than that, what I do is I'm a nerd. I love tech stuff. So it's fun for me. I'll read Engadget every day. Okay. And just basically, I don't know, I'll get the news just through Wall Street Journal, whatever. Yeah. But I am a fan of tech. Like I really enjoy it. That's why it's easier for me. Yeah.
Yeah. Thank you.
Yeah.
Thank you for
my pleasure. And another thing I do also is this. So I've got this app, and y'all know I'm not sponsored by anybody, but I've got this app called Blinklist, and it's really good. Okay. And what it does basically is it does 15-minute audible summaries of books, right? And so all business, tech books, etc. And you got to subscribe to it. I think it's totally worthwhile. Yeah. And so all the greatest books, whenever they're published by the who's who in tech and business, they're put on here. 15-minute summaries. It's great. I recommend it. Oh my God, Manas. I've never talked to Manas live. This will be fun. Yeah. We met him here. Cool. Excellent. And Shakun, where are you based?
Yeah, so I'm based out of the East Bay, San Ramon. I'm actually going to be coming to your side of the house tonight to meet with some
Okay, cool.
And look back. But yeah, I have been in the Bay Area for the last 20 years or so, and absolutely love it.
Excellent. That's great. It's weather's been beautiful here too. Yeah.
Yes, enjoying it while it lasts.
Yeah, and I think with global warming, I hate to say this, it's awful what's happening globally with heat. Obviously, it's global warming. I think that real estate prices in the Bay Area are going to go up a lot more than in Los Angeles in the long run, because it's cool here. It's sad to say, but yeah.
That makes sense.
Yeah. Yeah. Excellent. Well, pleasure meeting you.
Yeah, and likewise. I mean, the pleasure is all mine. It's awesome. Thank you so much.
Thank you for your support. I appreciate it. Cool. Okay, cool. Let's go to Kevin next. Kevin, how are you? Where are you based?
I'm doing great. I'm from Miami.
Oh, excellent.
So I'm 19 years old, so it's like an honor to be talking to you. I'm so young.
Thank you.
I've never really met anyone online as genuine as you. Knows all our courses, trying to teach all the things you're trying to teach. You can tell it's not genuine, but with you, it's always like showing how genuine, how much you care, and the actual experience you have.
Thank you.
I've looked at your LinkedIn. It's the insane experience you have. So
thank you.
Right now, I'm in community college in this program that we transfer a lot of students to Ivy Leagues. Some of my friends go to UPenn, Harvard right now. So I'm gonna be transferring soon. Next year, I'm gonna be applying this fall.
Nice.
So my plan is to be in asset management. I would love to be a portfolio manager.
Excellent.
So my question for you is, what would you do if you were me at 19 years old? That if you could change anything, in this climate with technology, networking, what would you do?
Yeah, no, great question. Thank you for the support. To be 19 again, I tell you. So I would say, and I've talked about this a lot in Webcast, your network is your net worth. When you're younger in school, if you do well, you're proud of yourself, you get good grades, teachers are nice to you, your parents are proud of you and stuff. And then you get into the real world and you look around and you notice, hey man, people are getting raises or promoted faster than I am. I don't get it. And people that didn't have the best grades are getting better jobs. And it's because they network and they ask. So I would aggressively network, which I talk about on my Webcast and my MBA program. I would aggressively network. Make sure your LinkedIn profile is perfect. Reach out to people that graduated from your community college or are also from Miami and have stuff in common with you, maybe a member of the same organization, and sit down with them for a coffee or a Zoom call. And just understand that people want to help you. All you got to do is ask. Now, when it comes to career, make sure you do what you're most passionate about doing, right? Instead of trying to figure out, how to get a job on Wall Street, first of all, ask yourself, why? Why do I want that job on Wall Street? And it can never be just about the money, because if you chase money, you'll lose your money and your dreams. But if you chase your dreams and you don't give a damn what people think of you and your choices in life, if you chase your dreams, you don't mind failing a bunch of times and you don't care what people think, something beautiful happens. Your dreams come true. And the money follows accidentally in the long run. It always does, no matter what anybody says. Yeah.
Thank you so much.
Yeah, my pleasure. And I love Miami. My parents live half the year. They're snowbirds from Canada, in Fort Lauderdale. Yeah, I love it. Yeah.
Thank you so much.
Yeah, of course. Great to meet you. And a lot of companies actually are relocating, not just to Texas, but also to Florida for tax reasons.
I believe Citadel moved out.
Yes, I was about to mention that. Ken Griffin, who's my old boss, I used to work at Citadel years ago. He picked up the whole company's moving. Yeah. It's amazing. And Caterpillar from Illinois is going to Texas. You've also got Oracle, which I talked about today, from Redwood City is moving to Texas. Everyone's voting with their wallet. Yeah, and I don't blame them. And Tony Robbins, actually, he used to live in California here. He moved to Florida, as you know, years ago because of taxes. And it's something I've thought about as well. Yeah. Cool. Nice to meet you. Excellent. Let's go next to Carolyn, who's in my silver program. She's from France. She lives in Ontario, and she has two cats named Mumu and Mimi. Is that right?
Yeah, they're just, hi Chris, hi everybody. They're just scratching at the door. I just hear them. They want to come in. Excellent. They're getting bigger.
Yeah, great to see you again. And what I'm also doing for silver students, just go to the first lecture of the curriculum. You'll see I'm doing a 2-hour call later today, Zoom. Yeah.
Yeah, at what time?
It's going to be 11:20. Yeah, and the link is there in the first lecture in the.
Was it that today?
Yep.
Oh, okay.
Yeah.
Okay, cool. Yeah, so I'll see you later then.
Excellent. I'll see you soon. Excellent.
Okay, thank you, Chris.
Great to see you. How's your crepe business going? I know you're looking to sell it.
Yeah, it's doing really well. A lot of people, myself, are really good, and it's exhausting a bit. So I don't have time to do too much of the paper side of it,
right?
Bureaucracy, but. And in my garden I got berries, and I'm collecting black currant, red currant, cherries, and raspberries, and black raspberries. And I'm making some jam and everything. So it's summer is a bit crazy. And I go to the boat club sometimes once a week, and
Yeah, nice. And you like to sail?
Oh yeah, actually we bought a used boat 2 years ago, and my fiance is putting it, renovating it, so it's about ready to sell now, probably next week. So that's really exciting.
Well, what's the name of your boat?
Well, the name came with the boat. We didn't change it. It's called the Mayero 2.
Okay.
It's the name of a beautiful island, apparently, somewhere,
cool, in
the Caribbean.
Nice.
So we kept the name, and the boat is it's a French boat from a French architect. It's a custom boat. So it's yeah.
Very cool. Excellent. Well, enjoy. Stay safe. Yeah.
Thank you.
Yeah. Excellent. I used to sail in Lake Ontario at the Port Credit Yacht Club when I was a kid. Yeah.
Hopefully, maybe one day you can come by to Canada. Not this year, maybe another year, and we can go sell. I make some crepes for you.
Oh, thank you. I love crepes. Yeah, I used to live in Nice, and I remember I used to get baguettes, and I dip it in Nutella. It was good. Yeah.
Yeah.
Excellent. Thank you. I appreciate that. Thank you.
You, Chris.
Excellent. See you soon. Awesome. Cool. All right, who do we have next? I've got somebody by the name BBA4AM038142. Okay, how are you? I'll call you BB. How's that?
I'm very great. How are you, first of all?
Good, thanks. You're my silver program, right? Are you?
Stop taking fun of me.
Yeah.
I have to change my name.
Yeah. No, I think I've seen you before the call. Yeah. Excellent.
Let's talk further. I'll change my name.
Yeah, that's okay, man. It's catchy. It's easy to remember. Yeah.
Okay.
Yeah.
Chris, there's a lot of problems going on in my life right now.
Yeah.
I'm fed up with my internship. One thing that I've figured out in my life is I cannot work for anybody. I just cannot. I've used to, when I was 18, me and my father started a business. I used to work I was so passionate. I was working day and night, and I was so happy. I was working 24/7. But now, when I started my internship, I've lost myself. I don't have any answer for that. Why I don't like to work for anybody else? I just don't like it.
Yeah.
I just don't. I cannot share my ideas. I don't have time for myself. 8 hours of my day I'm giving to someone else. And how will I build my own dreams? And I'm stressing out. I cried for 2 weeks for 2 weeks. There are days that I've cried. I'm so much. I don't know what. I used to be so happy, and I used to have dreams, and I was at the time procrastinating to start something, and it was a mistake, and I've got out of all the procrastination zone that I was in, and I in August end my internship will end, and I will leave. I'm not gonna continue this job, and and everything that was there to learn. I was in the S2, the content marketing side, and I've learned everything in the content marketing. I know SEO, I know link building now. I've learned technical, and I've learned when I was joining, they were saying to me that it will take 8 to 9 months for you to learn. And good, after 1.5 months, I've learned everything. I asked my supervisor what's more, and he says you already know what you should. You've already learned everything. That's all. It's there. You have to. Everything I do is just repetitive work every single day. I cannot. And I'm not the one who is actually benefiting from the work that I'm doing. I'm not getting, first of all, not paid. I don't care about salary. I've not even looked at my first month's salary. I just don't care about salaries. My parents are I have to tell I'm enough comfortable in my life. My parents have done well in their life now that I don't have to work in never again in my life. That's why I'm like, let's go on an adventure and start my own thing. I just cannot work for anybody. I cannot even tell you the stress that I have.
Okay.
Like,
Okay. Let me.
It's unexplainable.
I have a lot of love in my heart for you, and I will pray for you. But I need to ask you: Are you taking breaks? Because it sounds like you might be burned out.
I'm not taking breaks. I'm not talked to any of my, because I don't have time.
Okay. No.
Like, I don't have time even for myself. There's so many things that I want to do.
Are you working on weekends?
No, I'm not working on
weekends. What do you do on the weekends?
There are things that I want to learn. Sometimes I like to do graphic designing.
Yeah.
And I was learning Python. For 1 month, I'm not even wrote a single code. I got so passionate about Python. I'm not able to even do, because I don't have time.
Okay. So here's what I would do. Okay. So for thousands of years, our forefathers and foremothers have told us to take 1 day off a week. It's a reason. It's, the 10 rules in many great religions. One of the rules is to take 1 day off. Okay. God created the world in 6 days and rested on the seventh. He didn't have to rest, but he kind of wanted to let us all know that, hey man, you might burn out. And there's this, I watched National Geographic years ago on television. And what they did was they were showing this cheetah chasing a gazelle. And they put a lot of heart monitors on the gazelle. And what happened was when the cheetah was chasing the gazelle was running for its life. Its heart was beating really fast. And its reproductive system shut down. And its immune system shut down. And it aged. And the only reason we were meant to feel stressed in our lives is if we're running for our lives. Okay? If there's the pain that we just can't avoid. And it's not work that kills us, it's worry. And so what I want you to do, and I say this with love in my heart, is I want you to take off 2 days a week, Saturday and Sunday. I don't want you to use any screens, okay? I don't want you to learn Python on the weekend. I want you to go outside. I want you to have fun with your friends. I want you to go on long walks. I want you to maybe read a book and just decompress. And it's a great investment in yourself. Trust me.
Yes, I appreciate your suggestion. The thing is, I'm 20 years old. There, I have dreams too. I'm very passionate about creating my own stuff. I want to start my own company. If I will be in the job, it's a myth that people say that, oh, you can go and start a business when you are having your job. You cannot. It's not possible. It's not. You're not even in the zone. I'm going to leave after at the end of August. My internship will end. I have my last year of my college. My last year of college, I've not even started. I've just completed 2 years of my college, and I'm going to go for it. I'll never work for it.
Look. It's
the stress that I have. I don't want to experience that again.
Okay, look. Winston Churchill, and Michelle will love this because she's a history buff as well. Winston Churchill once said, I met a man on his deathbed. And on his deathbed, he talked about all the worries he had in his life, none of which came true. Don't worry, brother. Here's what I want you to do. I'm going to share my screen with you. And I want you to go with me to this website with me. Okay? Let's do it together. Everybody. All right. Go to HarunMBA.com, all lowercase, schedule. I don't know why the hell there's an H in schedule. Schedule, okay? And again, HarunMBA.com/schedule, all lowercase. And then I want you to click on this link here, and this will save you, okay? I promise you. Because this link is a scheduling system that a lot of my students use. And let me open it up. It's a PowerPoint document, okay? And it will open up in Google Slides and any other application you have too. And what I want you to do here, and I'll zoom in so you can see it a bit better. What I want you to do is I want you to create a schedule every single day the night before. Okay, so this is an old one of mine from years ago. Here you write down your goals. For me, it was some crypto course, whatever. And then what you do is I want you to write down here day 1. Okay. And I write here, print this out. Okay. Print it out. I want you to do it on paper. Okay. You write day 1. Okay. So welcome to day 1, not 1 day. And after you do it after 2 days, that'll be 2 days, day 2. And I want you to see if you can do this 30 days in a row. You enter in the date. Okay. And I'll come to this stuff in a second. And what I want you to do is I want you to schedule each day the day before. Okay. And I want you to get a clipboard with this and put it by your sink at night. Okay. So that it's the first thing you see in the morning, last thing you see at night. And I want you to schedule each day. You're going to get up at what time, whatever. But I also want you to schedule in time for exercise, the gym, whatever it is, family time or spend time with your friends, whatever it is. Okay. And I want you to do this. And then you write down your to-dos here as well. You customize this if you want to. Then, and this is crucial. Okay. But at the end of each day, what I want you to do is I want you to go through the schedule and I want you to score yourself. Okay. And I want you to take 10% off for each thing you violated. For example, if you didn't go for that walk at 1 p.m., take off 10%. If you didn't go to the gym at night, take off 10%. And then up here, and this is just for me personally, this is me, but if I didn't put God first, I didn't say my prayers, I take off even more than 10%. If I didn't spend time with family, I'll take off 10%. This little checkbox. If I didn't eat the right foods, I'll take off, 10%. If I didn't do weights, whatever. If I didn't put my customers first, I take off 10%. If I spent too much time on the internet and email hell, I'd take off time. If I didn't get 20,000 steps, I'll take off 10%, whatever. Okay. And there's other things too for me here. And then score yourself out of 100%. And I want to see if you can get as close to 100% as possible. And what I want you to do is I want you to schedule time for you, right? It might be, streaming Netflix, you time, go to the gym, you time. I don't want you to use any computers on the weekend. I don't want you to do any education stuff on the weekend online, no Python on the weekend, any of that stuff. Okay. And I want you to do this 30 days in a row. And I promise you this will help you. Okay. Because you're going through burnout right now. And I've been there too. And it's deadly. It's deadly. Just take a step back. Don't do work on the weekends. Okay. No online courses or Python on the weekend, and take Angela Yu's courses only if you're going to do that. She's great.
I'm actually doing that.
She's great. She's awesome. She's great. I want you to take a step back. I want you to go on a long walk as well. And I want you to think about what makes you happy in life. Okay. And I don't want you to worry, because I promise you everything's going to work out. Again, it's not work that kills us. It's worry. And you're going through burnout. Let me finish. I love you. Hold on. You're going through burnout, and I want you to take your breaks, and I want you to be patient as well. Don't worry, man. You look. You got the rest of your life to start a company, and I know you hate working for other people, and I've been there too, brother. I was bullied at work, and I hated the people I worked for, right? The ones that bullied me. And there's Moo Moo and Mimi, one of Caroline's cats. But what I did was I channeled that frustration. I channeled that frustration into starting my own company or getting a better job. Okay. And so what I want you to do is I want you to see crisis as an opportunity for you. And you're going to look back years from now and tell yourself, I'm glad I was frustrated. I'm glad I went through this. And don't worry, God has a plan. Okay. You're going to look back and say, I'm glad I went through that. God has a plan. Don't worry. Schedule time for breaks. Promise me you will.
Yes.
What are you gonna do this weekend?
I have no plans right now.
Okay.
I'm going to meet someone like a big brother of mine, kind of a person. Like I'm going to and I'm meeting him for a long talk or like having a deep conversation with him. Yeah. So for that, I'm going to meet him for Saturday. Yeah. So on Saturday, I'm actually going and meeting him. So that's the only plan that I have for the weekends. Yeah. And first of all, I go to the gym every single day. I've not left the gym. Actually, I've lost a lot of weight. I'm eating very right.
You look good.
So yes, I have lost weight. Till December, I will have till December, January, or February. I'm giving it good amount of time. I will have 6-pack abs. Okay, and I look absolutely good. So I have a very great diet. My mom is very great. She cooks very
You know what I do?
food.
Before I get out of bed every morning, you know what I do?
Yes.
I thank God for 10 things in this order. Andrew, Matthew, Dylan, Christine, my wife, my mom, my dad, my brother, Jamie, my sisters, Elizabeth and Katie, and all of you, my students. I practice gratitude. You know, I focus on what I have in my life instead of wanting what I want to acquire or become. God wants you to be happy every day. Today is a gift. Enjoy today. The past is the past. You can't control it. Don't worry about the future. Things are going to work out for you. I promise. It's worry that kills us, not work.
Yes, I want to talk about that. I've actually thought that why I'm stressing out and why there's so much problem. The thing is, first of all, this is not the life I have dreamed of like till now. That I want to do this.
You're 20. You're 20. You're just getting started. Don't be so hard on yourself.
Yeah. Here's the thing. I'm 20-year-old, but what I wanted to do, I kind of got like this is where I want to go. And when I've done this once and I've loved that thing absolutely. I can work tirelessly in that. Then I'm in a place that I don't want to be.
Okay,
the thing is, and why I'm worrying is the thing. Why I'm worrying. Okay, so I was with, you know, all that I've been through all failures and school and what happened to the first company and all that stuff. When I have something that I want to start, okay, I'll tell you the day everything will be ready. Like the end of August, I will prepare everything like done, and then before starting, I will actually share that everything in a proper business plan.
Good. Do not launch a company until you write a full business plan.
Yes, okay. I will show it to you to get your reviews and everybody.
Sure.
So I'm afraid that again they will, if I start my own company again, I will go to another failure. And
dude, look, you
I'm
only
worrying about that. Like,
do you know how many people?
There be a time that I will.
But hold on. All these successful entrepreneurs, they've failed more times than you and I have combined. You only have to be right one time in your life. And I don't want you to use your own money to start companies. I want you to use other people's money. And I teach you all about how to network to raise capital. Okay. Bill Gates, his first company was called Trafo Data. You know, when you go on a road and you count cars bump up, go over a wire. That was one of his first companies. It failed materially. Steve Jobs' first company failed. Oprah Winfrey was fired a gazillion times from all the big, television programs, whatever. J.K. Rowling, who I love, she basically was rejected by every single editor there is. Okay. Same thing with C.S. Lewis. Same thing with Agatha Christie. They failed so many times. Michael Jordan said, I failed over and over and over again. That's why I succeed. Thomas Edison failed 10,000 times, but he said, no, I didn't fail 10,000 times. I figured out 10,000 ways not to do something. Don't worry. It's going to work out. What are we here for? We're here to be happy every day. Don't put stress on yourself.
I was thinking about this thing only. That, dude, just go and start. And if I fail, I fail.
Sure.
I will start again. Like my life is not ended. Like I actually thought that I'm just 20. Like I can go to n number of failures and I will just go and start. Like if I keep waiting that, I might fail, I will always fail if I don't start.
Yeah. And I'm going to get my steps in here. Hope you guys don't mind.
Okay, I've already got my steps. I have walked today. I just came from a walk I walked around for 8 kilometers.
Okay, good, dude. Okay. I don't want you to work on the weekend. I don't want you to do any class on the weekend. I don't want you to touch technology on the weekend. I want you to spend time outdoors. I want you to do that daily schedule. And then next week during our Silver MBA Zoom, I want you to report back to me. And I want you to show me all 7 of those daily things. Print out 7 copies right now. Okay?
Right now, I don't have a printer. I will do it next day. It's like it's 11:14 p.m.
Okay.
in India.
First thing in the morning. Tomorrow is a weekend. Okay. What I want you to do.
No, tomorrow is not a weekend. Tomorrow is Friday.
Oh my God, that's right, dude. The older I get, the better I was. I have senior moments. Sorry, it's Friday's usually a slow day for me. Okay. Tomorrow, what I want you to do is I want you to get up early, and I want you to email that schedule to yourself, whatever, or go download it and print it somewhere. 7 copies.
I'll print it.
Okay. And then next week, I want you to show me 6 of them, okay? Complete it. And we'll go through it, okay? Because I promise you, if you schedule in time for you every day, and don't do the weekend, you're not allowed to do any work, dude. And no courses, no computer, screen-free weekends. I want you to try that. You got to schedule breaks because I am worried about you. But I've been there too. Okay. All right, cool. Let's move on. Anybody else have a question?
Okay, bye.
All right. Take care, brother. Don't worry.
Okay, bye.
Don't you worry. Yeah. Kevin. Yes, sir.
Question, yeah.
Sure.
So one of, I guess, the worry that I have is, I want to go into asset management in Wall Street and all like that. And my interest, like you said, you got to be passionate about it. My passion is about anything with finance. I love accounting. I love taxation. I love everything. So it's kind of like, I love investing. I like venture capitalists a lot too.
Yeah, cool.
I enjoy all those things, right? But my worry is like, what if I go in and I realize this isn't exactly what I like? What if I want to start a business? There's so many things that I want to do or that interest me. I'm a very curious person.
Yeah.
How do I lock in? Because the finance world is so big. How do I lock in on that?
Yeah. So finance, it's a massive industry. So for me, I started out, I worked at Goldman Sachs, the public markets, and I did a hedge fund industry, and then I changed to venture capital, which is private. There's a gazillion subsectors within finance, and you can network a lot like I did. If I can do it, anybody can do it. You network a lot to get different roles, okay? And the way you'll know you found your passion in life and your purpose and all that stuff, career-wise, is if it's vacation and you do work because you love it. In fact, if I told you that for the next 30 days, you can't go to school, you can't work, you can't travel, what would you do with your time? Whatever that is, that's your profession and that's your purpose, and you should chase it regardless of what anybody tells you.
Thank you.
Yeah, of course.
I like that.
Of course, yeah. Cool. All right. Who do we have next? Anybody else have a question?
Hey, Chris, sorry. I just posted a quick question in the chat. Is there a recommendation on video editor tools that you use? Because you do so much video, recording and training.
Yeah. Video editing tools. Do you have a Mac or a PC?
Yeah, a Mac.
Okay, great. Excellent. So what ships with your Mac is iMovie.
Oh, yeah.
And my first 20 courses or so, I used iMovie to make them, right? Like I used I have a course called Entire MBA in One Course. I did it just with iMovie. It's really easy. And never spend more than 2 minutes figuring something out when it comes to any software product. Go right to YouTube to get the answer. Yeah. So start with iMovie. And then once you understand iMovie, which is really easy and you already understand it, then you move up to Final Cut, which is what I did. Yeah, which is so much fun to use. Yeah.
Awesome. Thank you so much.
Yeah, my pleasure. Enjoy it. Have fun. Yeah. And do you have kids?
Yeah, actually, it's mostly for my kids.
Good. Yeah.
I think I've kind of asked you questions before. So I have 2 daughters who are like middle school, one high schooler, and
nice.
One of them is doing a mobile programming camp, and I think they have to record some videos. I mean, both of them, I do have them do some activities where they can broaden their horizons.
Yeah, I love it. And the way that I got started with video editing was my dad had a heart attack in 2005. He's fine now. And he's in Canada. He said, what warms my heart is when you send me like a video of the kids. And so what I did was I started sending my dad videos every day of just, the kids doing whatever it is they're doing. And that's how I learned about video editing and stuff. Yeah. So it's fun. It's fun. Yeah. And there's another purpose to it because it'll help you longer term if you want to start teaching online or whatever it is you want to do online. Yeah.
Yeah. I mean, I'm not sure if I'm ever going to be a good teacher, but
yeah. Well, anybody can teach. Yeah.
Thank you.
Anybody can teach. Yeah. And if you do teach, what would you teach?
I would say if I teach, I'd get into tech as well. I actually lead the cloud technology teams, in my company. And I think that I've been, a kid in tech or a girl in tech, woman in tech for a long time.
Yeah.
Overall, the representation has been a lot less than I would have, expected it to be. So I think that's another piece where I'd love to focus on is, motivating girls to take in more STEM classes, careers.
I love it.
Across the board, yeah.
I love it. What about, do you have a LinkedIn profile?
I do, which badly needs updating. So I'm taking one of your courses on it.
Okay. Okay, because what I recommend doing is becoming a thought leader, like I talked about earlier today, and start opining and do an article once a week on the tech sector and how you can get more women involved in tech. And you can
that's a good idea,
you can become a thought leader. Yeah, and you can even, and once you publish a bunch of articles, and what I did was this. On LinkedIn, I published an article every week for 2 years, and then I took all the articles, and the ones that got the most likes went to the front of this book, and the one that had the fewer like in the back, because no one ever finishes these things, right? And then you can repurpose whatever it is you make. All your articles become vlogs. And then a collection of your vlogs can become a course. You repurpose it. Yeah.
That is an amazing idea.
Yeah.
Well,
Yeah. And I've got a great template for you I want you to use. So I want you to write a book. So first of all, do those vlogs, okay?
Okay.
And then what you can do is you go to my website, haroonmba.com/all lowercase, write book. Okay, all lowercase, write book. And what you can do is you can download this book template, which I make my 6-inch by 9-inch books, right? Microsoft Word, and there's one page of it, explanation, it's free, on how to publish on Amazon, print, Kindle, ACX, which is audible.com. So all you gotta do is write your book here, just copy and paste all those articles you're gonna start writing next week in LinkedIn.
Yeah.
And then what you do is you just put it all here into a book, and then boom, you're done. Yeah.
Yeah, I've been thinking about one. I'm sorry, can you please repeat the link again? It's
yeah, absolutely. Yeah, it's haroonmba.com /all lowercase write book.
Okay.
Yeah, WRITE book. Yeah.
I got it. Awesome. Thank you so much.
Yeah. My pleasure. My pleasure. Yeah. And imagine how good it would feel when you're giving a guest presentation here in the Bay Area at Berkeley or community college, whatever it is, to women in tech, and you give them all your book for free at the end.
Yeah, no, that is a great idea. I did one recently, and I am scheduled for one later this year. So yeah, I'm definitely trying to get myself out there as well. And all based on your recommendations, I continue to learn from you.
Excellent. Yeah. Well, I'll learn from you. Please, I write an article every week. Okay. Do it for a year. Don't make any article more than 600 words. Do it for at least a year. And if you have 100 articles, then that's big enough to have a spine for the book as well. It's free to do. Yeah. And imagine every meeting you go into, a sales meeting, whatever it is, or with somebody more junior in your company, you can give them that book.
Yeah.
And you make the world a better place too.
Absolutely. And I'm sorry, you said 600 words minimum for the article?
Max. Yeah.
Yeah. About.
Yeah.
And not too short, not too long.
Exactly. Okay. Yeah. And try to never have more than 3 sentences in one paragraph either.
Mm.
Yeah.
Yeah. Those are great tips. Awesome.
Yeah. And the thumbnail, the image, and the title are crucial. And make it something simple like 5 ways for women to get more involved in tech. And then the image, something really nice and colorful or whatever. Yeah. And let me show you an article I wrote, and I'm really, this is the best article I've ever written. I'm really proud of it as well. And I got this great picture as well of this woman jumping, I think it was. Let me show you. Okay, so let's go over here to Chris Haroon Inc. magazine. I used to have my own column. This is how I learned how to write on the side. Okay, years ago. Yeah. And what I'll do is I'll paste this link for you in the chat. Okay. Oh my God, it's taking forever. Here we go. Okay, that's what I used to look like when I was younger. Yeah. Okay. Where is it here? Here it is here. 8 reasons to quit dreaming and start your company today. Okay, so make it like this. And here you're have a number like 5 how women can get more involved in tech. 5 reasons how. Have a beautiful picture like this, and read this as well. And what I'm going to do actually is I'm going to paste this article right now in the chat on YouTube, and I want you to read it and use this for humble inspiration as well. So let me go over here to YouTube, and I will paste this directly in the chat here. Oh my God, I have so many windows open. Give me 1 second. Yeah.
I got the link on link.com.
Oh, you did? Okay, good. Excellent. But I'm going to paste it here as well because I want everybody to read it. Okay, great. Let me close this window because I hate the sound of my voice. Okay, cool. Excellent.
Thank you.
Cool. So are you going to write an article?
I will. I already had one in mind, but I'm going to rethink
Good.
some of the strategies around, the 5 reasons and then the 600 words and 3 sentences per paragraph. So I will have to rethink about that, and I will do it. Yeah.
Awesome.
And how about I share that with you?
Excellent. Yeah. When are you going to write it?
Over the weekend, yes.
And when are you going to publish it?
Hopefully over the weekend as well, and get it done with it.
Okay.
Yeah.
And when I'm so sorry to ask this. I don't mean to be pushy, but I say this with love of my heart. When is your book coming out? What date?
No. I think you're putting me out for some commitment out here.
I am.
Well, if I'm able to follow your plan, then how about in 2 years? Isn't it the 100 articles, 2 years? I think that's something you said in your
that's
video.
right. Yep. Okay, good. So 2 years from now. So what is today? Today is what? July 21st. So July 21st, 2024. Oh my God. I'm getting old. Yeah. So put that in your calendar. Yeah. Put it in your no, you're young. Put that in your calendar right now. Okay. And have that repeat every single day. Okay. Make it a 4 a.m. Entry in your calendar to repeat every day. Okay. Your deadline is July 21st, 2024. And what I want you to do is, and I'll show you my personal calendar. Okay. I'll show you how I kind of run things here. All right. So what I do, I'll show you here. Okay, so let's go to calendar. Okay, let's go to my personal one here. Jim, here we go. Okay, so here's what I do. So this here is a calendar entry that runs every single day at 7:45 p.m. Okay, and all this is here is when I go to the gym, I write down what I did, how many reps and all that stuff. I update it every single day, right? Every day. Oh my God, it's endless. Yeah.
Nice.
So do something like that. But do it so that it's called write book with your deadline date as the subject. And then the contents are just ideas for chapters or articles. Yeah. And never force yourself to write them. You will feel inspired, like when you're driving on 101 or 280, whatever, and you're like, oh my God, I have this great idea. And you have to pull over to a Starbucks or McDonald's, whatever, in the parking lot and write. And that article I just shared with all of you over YouTube chat, I wrote that one in like a McDonald's parking lot when I felt inspired. Yeah. And just know that you're inspiring other people doing this as well. You're doing a good thing.
I thank you.
Yeah, of course.
I just have to say, I do also listen to your daily videos on LinkedIn. I mean, I'm just, an ardent follower. So thank you for everything.
Thank you. I appreciate, and thank you for inspiring others as well. And I can't wait to read your articles. Yeah. And let's do this. In 2 years, when your book comes out, and again, you want to sort it based on which articles got the most likes or whatever, comments and stuff you feel proud about.
Right. Mm-hmm.
When that comes out, what you can do is you can repurpose that by recording yourself, and I'll help you with it if you want, record a course, right? And it can be called, 101 tips on how women can become even more successful in tech, something like that. And that way you repurposed it. And then you can that'll be a vlog, and you have 101 vlogs there too. You repurpose that. You can release one per week to grow your YouTube presence, and then start teaching online if you want. Yeah.
Awesome. Yeah.
And there's
inspired by you.
Yeah.
So,
No, please.
Yeah.
And the only reason why there are other people teaching online and making a lot of money teaching technology is because you haven't entered the market yet. Like once you do, you could blow them away, and you've got great presence already. Yeah.
Okay, appreciate it. Thank you so much.
Of course. One more thing. So when I did my TEDx talk years ago, what I did was I wrote the speech and I put it over on LinkedIn. And I want to get feedback. And I got a lot of feedback from people. And that was my speech. But what you can do is that speech you gave recently, just turn into an article.
Yeah, that's a great idea.
Yeah, why not?
That's a great idea.
Yeah, and maybe at the bottom of the article you can write this. If there's any any organization that wants me to give a free guest lecture on how women can become even more successful in technology, please reach out to me. I'm happy to do it in person or over Zoom.
Yeah. My TikTok was specifically on technology, like cloud technologies, and I know you mentioned a whole lot of that as well.
Yeah.
I can convert that to an article and say, hey, this is one opportunity to inspire women to be in tech, because these are all good and high-paying jobs. Yeah.
Awesome. This is great. Good. This is going to be your next side hustle. I love it.
I can't believe I'm hearing this directly from you. So this will definitely give me more motivation and inspiration to actually do it.
Let's make it happen. Yeah.
Yes.
Okay, good. Excellent. Good. And I'm so sorry, everybody, but I do have to wrap up this call right now. If you guys have more questions, please ask me next week. If you're in my Silver MBA program, please go to the first lesson in the curriculum to find out about the 2-hour Zoom call we're doing today. If you're in my Gold or Platinum program, I'll see you guys very soon here online on Zoom. If I have one-on-ones with you in my Platinum program, I'm looking forward to chatting with all of you. Please click the like button, everybody, and subscribe. This will help the challenge. I hate asking, but I have to. And I've got my son Dylan involved, and he's trying to get us to 100,000 viewer or subs by this date here. Yeah. Crazy. That's my deadline date. Yeah. All right, guys. Take care. Thank you, everybody. God bless. I'll see you guys. Thanks. And I'm going to end with my usual, thank you, my usual Steve Jobs video at the end, which I licensed from the Silicon Valley Historical Association. If I can ever find the way to end this call. Here it is. Thank you.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it. That's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.